Good morning, Jim, Sydney, Abdulaziz. Nice to see you guys. How's everyone doing today? Hopefully, those of you in Florida are doing all right. Nobody got beat up by the hurricane. Make sure. Can you guys hear me? Nope. Here we go. Let me connect. It's probably. I'm on the AirPods. That should sound better. Everybody doing all right today? I hope so. Excited about the day. Excited about the day. And guys, I want you all to recognize and embrace the irony that I misspelled education. I missed I missed a letter in there. Oops. What do you say we get to some routines? Let's start off doing what we do every day, guys. I'm going to go to forexfactory.com/calendar, and we're going to see what's going on in the wonderful world of news. I know that we had news at 8:15, created a little movement. We had news at 8:30, created a little movement, and it was that high impact news, medium impact news. And guys, these can move the market. They can make it bounce and jump, reverse, move too quickly to trade. So every morning I check news and I give myself the advantage of not walking in front of that bus, right? That freight train of emotion. At 10 a.m., we have pending home sales. It's medium impact. It has the potential to move that market a little bit. It's also Wednesday, which means we have crude oil inventories, which means at 10:30 a.m., some guy in the oil industry is going to say something about the reserves, right? We don't know if it's going to be good. We don't know if it's going to be bad. But what we do know is that there's probably a boatload full of speculators waiting to react to what he says. So if you're trading crude oil, right around 10:28, 10:27, it's a good time to go make a sandwich. Don't get caught up in that. And I do this every morning, guys. I go through every morning and I check the news and I make sure that I'm not trading in front of it. And I'm going to tell you that when you trade in front of news and you take the perfect trade and it just runs you over and slips you 7 or 8 points, that's when you start to believe in the news every morning. And I think we've all done it, right? So what I'm doing is I'm saying, hey, here's your pitfall to avoid, but all of you are going to do it once. And that's what's going to do it. It's I can tell you don't touch that hot stove. You're going to touch the hot stove once. It's okay. It happens. I want to remind you guys, how do we get to where we want to be? I'm just going to mix up the day today. I can do that. It's Wednesday, middle of the week. Um, Everything starts with pictures, guys. Everything starts with pictures. And I say this every day. The more pictures that you give me, the more pictures that you collect for yourself, the quicker you're going to get to where you want to be. I'm available. I'm available. You get my undivided attention for 15 hours every week, live, to show me the trades that you take, to show me the questions that you have, to get the clarity that you seek, right? 15 hours live every week. Um, so the more pictures that you take, the more you post in class, the quicker you're going to get to where you want to be. I posted a picture this morning. This happened in the market. This is S&P this morning. And I posted this picture in the room to remind you that from one picture, I can gauge advantages, right? From one picture, I can see this trade setup. I can see the entry. And from this one picture, guys, I can give you feedback whether or not you're on the right path, whether you're reading your indicators the way they're supposed to be read. Um, I can give you really an awful lot to move you forward if you just give me the opportunity through posting pictures. The next thing you're going to do is I need you to track everything that you do. Um, it's funny because when I started day trading, when I started learning the software, when I started learning Nexgen, I'm gonna raise my hand and admit I thought using a spreadsheet was a colossal pain in the butt. What an awful lot of work I'd had to do to make $1 million a year. Jose, good morning. What a pain in the butt to have to record and write on every picture that I take, and what an absolute challenge to my senses to put it into the spreadsheet. And guys, I skipped it. I didn't do it for 3 months. I floundered. For 3 months, I didn't take pictures. For 3 months, I didn't post them in the room. For 3 months, I didn't use my spreadsheet. At the end of those 3 months, I was brilliant. Just ask me. And I took what may be the absolute fastest butt kicking since Mike Tyson fights in the 80s. I lost a little over $5,000, and I lost it in 22 trades. 22 consecutive losers where I had absolutely no idea why I lost, what I was doing. All I knew is that because I'd spent 3 months with the software, I was entitled to be a winner. Didn't work out that way. So then I started the path. Then I started taking all these trades and posting them in the room and getting feedback every day. And then I started using the spreadsheet. And what I realized with the spreadsheet, and this is what you'll realize, whether you're working on building a plan or whether you're refining your plan or whether you're looking for consistency, if you took 5 trades yesterday and you put them in this spreadsheet, if you went back and looked at all 5 trades, would they look the same? Would they follow the same set of rules? Would they have that exact same list of advantages that bring you success? And if they do, you're going to notice what worked, right? You're going to see that and you're going to want to repeat it. You're going to put yourself in a position where you can do the same thing every day and typically get the same results nearly every day. But you're also going to recognize what didn't work. And that's where the classroom and that's where the spreadsheet comes in handy. If you study your spreadsheet the next morning, you're going to notice some of you trade in determination conditions. Some of you jump in when you shouldn't be jumping in. Some of you get out when you shouldn't be getting out. You're going to recognize patterns in the market. But more importantly, this spreadsheet allows you to recognize patterns in yourself. What is your weakness as a trader? Um, is it not having the correct momentum, or is it not having a clear path? Is it not having that entry area so that your risk is escalated, right? You're going to recognize these patterns. You're going to understand what keeps you relaxed, and you're going to see what gets you nervous, what gives you those sweaty palms and that fast heartbeat. In this spreadsheet, a simple 5 minutes every day, go back and see what you did yesterday, right? And that's why annotation of charts is so important, because I need to know what I did. I need to know what I was thinking. But it's going to accelerate the learning, guys. It's going to get you in a position to get to where you want to be. So when you annotate your charts, it's imperative that you tell me every time, what did you see? And I want you to relate your vision back to the rules that you're following. And if you're just learning the rules, I'm going to give you a checklist with the rules so you know exactly what to write on your chart, exactly what you're looking for. But tell me about the momentum. Tell me about whether or not the path is clear. And tell me where you got in and why you did it, right? And then you can also, too anxious to take action? I'm going to address that right now. After I say, how did you feel? Confident, anxious, nervous? Tell me. So, Cream White, if you take a trade because you're afraid of missing a trade, right? Or if you take a trade because you hope that it goes in the direction, or you're anxious to take that trade, that anxiety is a reflection of trust. That's all it is. And I know it because I've had the anxiety. It's because you don't trust your methodology to produce more winners than losers. It's because you don't trust that your entry is in fact the best entry, or that your advantages are in fact the best advantages. And guys, trading's like a relationship. When you met that woman of your dreams, you didn't lay a loaded gun on the bedstand next to her at first, right? She might be crazy. You had to develop that trust. You had to get to the point to where you were comfortable. And guys, this is where the spreadsheet comes in. That spreadsheet, every time you take a trade that fits the rules and it wins, you're developing trust. Every time you see one of these advantages push the market in the direction of the trend, you're developing trust. And every time you take a picture and you annotate it, hey, good morning, Tim. And let me show you. Every time you take a picture and you say, this is my best of the best look, and look at how often it works. This is the same picture, essentially, 250 times. Cream White, you're developing trust. That's the expectation, right? To test, to practice, to develop that trust so that anxiety goes away. I can tell you when I take a trade, I'm not anxious. When I take a trade, I don't get nervous. I try not to get hopeful, right? All I'm doing is I'm going back to the advantages. I'm going back to a foundation that's created a scenario that wins more than it loses. Um, And it's a journey, ladies and gentlemen. It's a little bit of a journey. What we teach in the beginning of the day, what we teach here in classroom when we talk about this high probability trend trade, this is a foundational trade. This is a trade that's going to teach you to read your indicators. This is a trade that's going to have you understanding where the market is likely to continue, where it's likely to go, and where it's likely to stop. It's one trade, and we're going to learn the trigger line and Fibonacci rules for when it's okay to take this trade. Most of you are go-getters, type A personalities. Most of you have experienced success in whatever field you're in, right? You're good at what you do. But now you're brand new again. I want you to let yourself be brand new. I want you to put yourself back into the mode of being a student, rather than the one that has all the answers. So when you learn these rules, just practice them, right? Get that repetition, get that recognition. And we're going to simplify initially, guys. We're going to focus on one trade for the first hour, that high probability trend trade where every indicator on every chart agrees for the trade. This is the trade that's going to lay 30 feet of concrete and give you the most solid foundation that you could ever hope for. Good morning, Alan. And I'm telling you guys, if you keep it simple initially, you're going to branch out beyond this high probability trend trade and you're going to start to recognize advantages that don't fit into the rules, and your trading plan will grow the same way that you'll grow. But you have to lay that foundation first. If you chase everything, you're probably going to catch nothing, right? But if you focus and you get the best of the best, it's going to open doors for you. You have the opportunity to use market replay to go back, to retest the day, to play it as though it were live, to test your rules, to build trust for your rules. Take a million pictures, guys. Bring them in. If you were in class yesterday, you saw Mr. Solar come in with 11 preloaded trades. Mark, this is what I did in the last couple days. Let's get some feedback on it. And he got it on every picture that he posted. And then you're just going to do this every day until you always take the correct trades, guys. This is your path to get to where you want to be. This is your path to get to where you told Mark Dean or Chris or Cameron or Jim, I want to be a day trader. I want to make $500 a day. Because at $500 a day, eventually I can quit my job. I can trade from home. I can travel the world. I can have all these things that I've always wanted for myself if I can just make $500 a day. This is your path to get there, guys. This is your path to get you where you want to be. And it begins with a high probability trend trade. A trade that only has 3 rules. You're going to do your best to create more rules. I'm going to encourage you not to. Let it be 3 things in the beginning, guys, because these 3 rules, these 3 easy to identify rules, create 3 advantages: momentum, a clear path, and an entry area. These 3 advantages pieced together create a trade. And it really is that simple if you allow it to be. So we're going to focus for the first hour on the looks. We're going to look at the rules individually, and then we're going to piece them together. And I want you to pretend that day trading is like eating an elephant. You have to do it one step at a time, and it's going to make everything easier. If you try to do it all at once, it becomes overwhelming. Um, these 3 rules happen on only 2 charts. 2 charts, 3 rules. And your large chart is going to be on the left side of your screen when you open up your workspace. Your large chart is a broad stroke of a brush. It's the general temperature of the market. It's expressing what the large crowd, the in control crowd, wants to have happen in the market. And your large chart is going to identify direction. It's going to tell you which direction the market is trending. Your large chart is going to identify the momentum in the market. And your large chart is going to identify the areas that may be of a concern to you. Your large chart uses one bar in the moment, the most current bar, to give you all of this information. And it really is a simple glance. And once you focus on it for a day or two, it's going to start coming into focus. Once the large chart says that you have momentum through rule number 1, and once the large chart says that you have a clear path from rule number 2, then you're going to turn your attention to a smaller, faster chart. This smaller, faster chart takes one bar on your large chart, and that one bar on a large chart is about 15 to 30 bars on a smaller, faster chart. It's nothing more than a refinement chart, taking that broad stroke of the brush, right? You just painted the living room wall, and now it's time to get down by the outlets. Now it's time to go around the light switches. We're going to take one bar here, turn it into 15 to 30 bars, and this is where rule number 3 is going to allow you to pinpoint the area where the market is most likely to continue. This pinpointing is going to allow you to reduce risk. It's going to give you the ability to maximize your profit potential. And it's only 3 rules, guys. 3 simple rules that are easy to identify. And it's going to happen on these 2 charts. And we're going to cover it right now. We're going to get into it. We're going to talk about this high probability trend trade. Um, and we're going to focus on identifying the advantages. And it starts with odds favorable momentum. Everything on your charts is going to begin with using the T3 trigger line. So if I come back to the tutorial section and I click on that tutorial section, I'm going to go to the T3 trigger lines, and there's 2 parts to your trigger lines. Your small triggers are 2 lines, solid lines working together, and this is a smaller, faster momentum indicator. Your large trigger lines are going to be the dashed lines. This is a slower moving indicator, but what happens is these 2 triggers work together, and they're going to give you a lot of information. The first thing that they're going to identify is the trend. When the small triggers break above the large triggers, it's going to paint your background green. A green background on your large chart means that you're in an uptrend. It means that you should only be looking for rules to be met for high probability trend trades long. If the small triggers break below your large triggers, it's going to paint that background red. It's going to let you know that you're in a downtrend, and it's going to keep you focused on only looking for rules to be met for high probability trend trade short. While this isn't a rule to get you into a high probability trend trade, not fighting the trend is going to eliminate an awful lot of mistakes for you guys, and it's really the most simple process that you're going to do with the software. I'm going to put that picture in there. Please feel free to steal every picture that I put in the room. Whew. But here we go. What direction is the trend on the S&P right now? And guys, get good at saying it fast. Is the market going up or down? What do you think, guys? Red background. Anybody? Remember that I know this. You're learning it. Don't be shy. It's down, absolutely. What if your chart looks like this, up or down? I tell you right now, you guys answering are the guys that are going to get to where they want to be. Up or down? I'm going to do 3. This is the last one, I promise. Down. And guys, that's how simple it is. Trade with the trend, right? Go with that overall direction of the market. And then once you have that direction of the market, going to make sure that you have strong trigger lines. Rule number 1 for a high probability trend trade says that you must have strong trigger lines. And strong trigger lines, whoops, get back over here. Strong trigger lines mean that your small triggers, the faster moving indicator, good morning, Gary, has broken away from and above your large triggers in an uptrend. And it's the space created between small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend. In a downtrend, smalls are below the large are wide, they're angled in the direction of the trend. You can't have odds favorable momentum and not be trading with the trend, right? Because when the smalls break above, it paints green. That separation on a green background means that the odds are favorable for the market to continue. That's strong triggers. That separation in a downtrend, small below the large, lets you know that the odds are favorable for the market to continue in the direction of the trend. This is your first advantage, guys. This is the one that sets the tone for everything, because these strong trigger lines let you know that the conditions are the most favorable for buying a pullback at Fibonacci support on your smaller, faster chart, or for selling a pullback to Fibonacci resistance on your smaller, faster chart. Remember, your large chart is 1 bar. When we get those pullbacks, those potential entries, they're going to look like tails on the large chart, or wicks. On 1 bar, it's a tail. On a small bar, it's a pullback. It's that retracement to an area inside of favorable large triggers. So every time you see strong triggers, and you see one of these tails, if you're scrolling back, you can say to yourself, well, that may have been a potential entry. So I'm going to take everything off of this chart, and guys, I want you to humor me one more time. Give me your answers. Let's make sure that you're comfortable. Do I have, on the most current bar, odds favorable momentum? The background is red, but the large triggers are green, and my small triggers are red. These don't agree. They're not wide and angled in the direction of the trend. So is there? So absolutely not, Tim. There isn't odds favorable momentum. And it's really that simple. And watch this. If we scroll back, most current bar, do I have odds favorable momentum? Yes, absolutely. And look at that. There's one of those tails. So now if I expand a little bit, there's odds favorable momentum to the upside. There's odds favorable momentum to the downside, and check it out. There's another one of those tails, a potential entry. And it really does become this easy to recognize in the moment, guys. Not odds favorable momentum. All I have to do is recognize that without that momentum, without that strong trigger line, I don't have the advantage of momentum. And if I don't have the advantage of momentum, that market is not likely to continue in the direction of the trend. Not yet. And then if I have my small triggers inside of my large triggers, if that separation closes and they work their way back in, that's a weakening of the large triggers, guys. And weak large triggers tend to precede a reversal, especially when it coincides with Fibonacci areas. So this is your advantage. This is rule number one. These are your strong triggers. And rule number one isn't something that happens every second of every day. Rule number one, get off the screen. You may have that odds favorable starting right here at the left, and as it pushes down, those trigger lines weaken. And you get into a scenario where anything can happen up or down, and you're going to hear me call them anything can happen triggers. And if you use that language, anything can happen, you're reminding yourself that the advantage is gone. Ultimately, the market turns. There's that odds favorable momentum, and there's a potential entry. And notice that the market continues up with all that momentum until they weaken again and the market reverses, providing you odds favorable momentum. The market continues to push down, and then you get indecision. You get exactly what we see on the S&P right now. You may have the large down and the small up, and they don't agree. You may have a downtrend, but the small and large, or an uptrend, but the small and large say down. Once again, it doesn't agree. This is where buyers and sellers are fighting, guys. This is where they're battling for supremacy. A lot of times you'll see this happen in between Fibonacci areas. But without the advantage of momentum, this allows the brand new next-gen user to sit on their hands, to not predict, to not get caught up in those moments. And if I go back to my chart, that's exactly what happened right here. My large were down and my small were up, and it could have gone either way. And then over here, my large are up and my small are down, and it can really go either way. So, new users, embrace the idea that strong triggers create an advantage. Absolutely. Let me put my indicators back on here. And let's go back to the picture. So those anything can happen triggers. When the small triggers return to the large and work their way inside, it's a weakening of the triggers. Anything can happen up or down, right? It's like a crapshoot, guys. It's like betting one red and one black on a roulette wheel. You don't know which is going to hit. It might win, it might not, right? And this is the look that typically coincides with Fibonacci areas. Watch this. There's those weaker triggers right at support. There's those triggers with indecision right at support. Weaker triggers right at resistance. You're going to see it a lot. Indecision as it pulls back to a midband. So That's your first advantage, guys. That's strong trigger lines. That's the best of the best. That's the one that's going to set the tone for everything. And when you don't have it, when they don't agree, sit on your hands and wait. 90% of what you do during the day is going to be waiting for advantages to transpire. 10% of what you do is going to be taking trades when they do. So is everybody comfortable? Rule number one, strong triggers creates the advantage of momentum. I can't stress this enough, guys. Strong triggers are going to erase mistakes. Strong triggers are going to let you bend rules. Strong triggers are going to break areas. So now we have to decide, what are areas? Well, rule number two says that termination conditions are false. Rule number two is going to give you the advantage of a clear path. What does that mean for you? That means that you're not trading into a Fibonacci area that may reverse the market. So I'm going to give you guys this picture, especially for my new users. This is just what you're looking at on the charts. Areas that may reverse the market, that may cause an untradeable bounce. Areas that the deep pockets institutional traders are recognizing and using for profits and entries may be divergence high lines, these magenta lines that print from a pivot when there's a loss of momentum. Divergence low lines, these cyan lines that print from a pivot. Pivot means the market went one direction to the other. There's a loss of momentum, and I see it through this line. Red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. Guys, these are the areas that may stop the market right in its tracks. These are the areas that may take away your advantage of a clear path. And it's a pretty simple process to recognize when that path is no longer clear. I'm going to go to the second section here. Fibonacci tops and bottoms. Why do we call them tops and bottoms? Because these termination conditions can create a full reversal in the market. They can turn the market on a dime. Very often you'll see the market turn to the tick off of these Fibonacci areas. So we have to be able to recognize them. You're going to see these areas long before you ever get there. Fibonacci support, Fibonacci resistance. Let me show you how off in the distance these triggers are. I can recognize Fibonacci resistance at 40, 45, 30, all the way up here. I can recognize Fibonacci support all the way down here. These lines have been there since the open of the market, so you know that they're there. We just have to decide whether or not they're going to be a reaction point. And we do that in a two-part process. The first part is simply your price is going to reach the area. These dynamic Renko bars are going to make their way to Fibonacci support, Fibonacci resistance, yellow one-to-ones, divergence lines. So price, the Renko bars, comes down and reaches support. That's the first part of the recipe for identifying termination conditions. Price must reach the area. If price hasn't reached the area, well, then that area is a target, not a termination condition. Price reaches the area, in this case Fibonacci support. All I want you to do is ask yourself, where are my trigger lines? If my trigger lines remain above support, support is a termination condition. Rule number two is not met. We don't have a clear path. It's really that simple, guys. Price reaches the area. If the triggers don't break, it's not a clear path. Sit on your hands and wait for a second. Well, when do we have a clear path? We have a clear path when both your small triggers and your large triggers get to the other side of the area. So small and large get to the other side of support. Notice how support begins to act as resistance. Areas break all the time, and they typically break when your triggers have that odds favorable momentum. So small and large get through support. Support begins to act as resistance. The path is clear. The triggers are strong. The path is clear. That's your first two rules. And there's one of those tails, one of those potential entries for your highest probability trend trade. And notice that that momentum carries you all the way to the next Fibonacci area. Pretty amazing, right? This is your recipe for success. Have strong triggers, have a clear path, and then you're going to look for an entry. And you're going to be able to identify termination conditions all day long, guys. Price comes down, triggers break through the area mostly, and we get one of those pivots. And this pivot lets us know that there's a loss of momentum. This cyan line prints about the third bar. This cyan line on its own is not a termination condition. It's important that you understand that. It's just a loss of momentum. That's all it is. This loss of momentum, the market pushes up a little bit, and then it comes back down. And then we get into the equation when price reaches the area and the trigger lines remain above. Now it's a termination condition. Now it's an area that may reverse the market. So just a loss of momentum, but when the equation happens, price reaches, triggers remain above. Now it's a termination condition, and we call this a pivot stop out of a divergence line condition. This is your pivot with divergence. This is where it stopped out. Everybody that tried to go long got stopped out, and then the buyers took over, right? Then the people in charge recognize the termination condition, and it reverses the market. And if a termination reverses the market, it's what we call a strong bottom. And a strong bottom is the precursor for the highest probability long trend trade that you can take. In this next picture, it reminds you that 90% of what you do is just reading indicators. Price reaches resistance, triggers remain below. There's that recipe again. No long trades. Price pulls back to support, trigger lines remain above. No short trades, 90%, waiting for the advantage. Now price pulls back to resistance, that divergence line, a second resistance. All of your trigger lines remain below. We have one of those pivot stop outs of a divergence high, which is a termination condition. If it coincides with Fibonacci, it becomes even more powerful. And when this termination condition at a high creates a full reversal, large triggers go from green to red, smalls give you separation between the two. There's one of those tails. A termination from a high that creates a full reversal is the anchor for the highest probability short trend trade that you can take, guys. This becomes your best of the best trade. This becomes your foundational trade. One last time, just for repetition. Price reaches 1-to-1s, all the trigger lines remain above. No more short trades. And look at the reaction. And look at the indecision that's created as buyers and sellers fight for supremacy right at this key area. You get up bars, you get down bars, you get indecision in the trigger lines. But ultimately, this termination creates a full reversal. Large go from red to green. It gives you odds favorable momentum. And notice how both small and large get above resistance. It begins to act as support. Smalls are outside of the large, and there's one of those entries for the highest probability trend trade you can take. So guys, as a brand new user, you're going to be able to recognize potential termination conditions. And I'm going to show you the process just like this. Price reaches Fibonacci support. Do you notice how absolutely no trigger lines break through? Rule number 2 is not met. Sit on your hands and wait. Let's see what happens. When the small triggers get through and the large triggers don't, this area has the potential to break with all of that momentum, but it's not broken yet. It's not a clear path yet. Is everybody comfortable with that? No triggers. We have to wait. Small triggers with odds favorable momentum. It has the potential to break, but it's not until both the small and the large get through that area is considered broken, and you have the potential for the market to continue down. And ultimately it does. So let it be simple in the beginning. Let it be easy. No triggers, no trade, right? Let the large chart lead the way. Focus on the best of the best. I accidentally closed out my chart. There we go. Make sure as a brand new user that you have the advantage of a clear path. And then as you grow with the software, what you're going to find is that momentum and that potential to break works its way into your trading plan. So far, the large chart has defined our direction through trend. The large chart has defined our momentum with those trigger lines. And the large chart has defined our area with the relationship of the trigger lines to the area. So now that rules 1 and 2 are met, now that I have the advantage of a momentum, now that I have the advantage of a clear path, I'm going to go to a smaller, faster chart. I'm going to refine this broad stroke of a brush, and I'm going to whittle it down to an area where the market is most likely to continue. Rule number 3 says that I'm going to use a limit order. Is everybody comfortable with what a limit order is? A limit order means that you're going to wait for the market to come to you, that you're going to pick your spot ahead of time, and you're going to wait for price to come back to you. And guys, that's the accuracy that this methodology provides. Using a limit order, you're going to buy or sell a pullback, a small retracement in price that's counter to the underlying trend. When the large chart says up, when the large chart says clear path, we're going to let the small chart, that 15 to 30 bars, refine back to an area inside of favorable large triggers. Everything says up, we want the chart to come down. We want that refinement process in place. Everything says up, we want the market to come down right here to an area inside a favorable large trigger. So how do we pinpoint the area, guys? That's your trade. This is your focus for the first 20 days. I'm going to show you. When everything says up, when the momentum is the strongest, when the path is clear, this should be the look on your smaller, faster chart. It's going to mirror that large chart. The trend is going to be up. The small triggers should be outside of the large triggers. They should be strong. You should have odds favorable momentum on both charts. You're going to look for and look at the large triggers and the synthetic triggers on your smaller, faster chart. Your large triggers will be the smoother triggers. These are native to the 5-1. These are the slower moving average for the 5-1 chart. And then your synthetic triggers will be the ones that look like they have corners on them. And those are nothing more than the large triggers from your large chart. But these two work together. They work in this symphony of symbiotic happiness. And when they overlap one on top of the other, we're going to call them favorable large triggers. And favorable large triggers, wide, angled in the direction of the trend, are going to give you the smallest window of opportunity, the smallest point where the market is likely to continue. The more separation between the triggers, the larger the window of opportunity, the larger the risk. The tighter the triggers are, one on top of the other, the smaller the window, the smaller the risk. So embrace the idea as a brand new user that favorable large trigger look is your best of the best. Large and synthetic, one on top of the other. Everything says up, you've identified your triggers, and now you're going to look for the areas. Every trade comes from an area. Every high probability trend trade needs a line to bounce off of. And those lines can be Fibonacci support or resistance, whether you're going up or down. Those lines can be a mid-band, and those lines can be these yellow 1-to-1s. Each of these areas is going to behave like a brick wall that you're throwing a ball against. And when they're inside of favorable large triggers, it creates the best case scenario. So we're going to identify the window of opportunity. We're going to look for the areas that fall inside of favorable large triggers, and we're going to create that window when the pullback begins, when we get a reversal bar on the smaller, faster chart. Remember, 1 bar on the large chart is 15 to 30 bars on the small chart. This reversal bar prints, you're going to identify for a long trade your highest point of support to your lowest point of support that falls within those large triggers. If this were a short trade, you're going to identify your lowest point of resistance to the highest point of resistance that falls inside of those favorable large triggers. Reversal bar happens, draw a box. I think it's a great tool. Identify your triggers, identify the areas, and draw a box. Your limit order goes at the top of that box, at the top of that window. Because of the momentum on the larger chart, we're not expecting a deeper push. It can happen, but we're going to catch it at the top of that window. And then it's out of your hands, guys. It's either going to come back to the window or it's not. You're not in control of that. You have absolutely no vote, no say, no pull. But if it does come to the top of that window and hits your limit order, you're in a long position, and you're in a long position with the advantage of momentum. You're in a long position with the advantage of a clear path, and you're in a long position having entered the market where it's most likely to continue, guys. And this is your high probability trend trade. I want you guys to give me 20 days focused on entries. I know it sounds like a long time. 20 days focused on the best of the best entry, because at the end of that 20 days, you're going to be a chart reader. You're going to understand momentum and you're going to recognize it at a moment's notice. You're going to understand a clear path and it's going to take you no time at all to identify it. And you're going to get to the point to where you can pick these entries, guys. You can get into the market at the absolute best of the best spot. And what it does for you is it reduces your risk. It manages your risk and it increases your profit potential. So your goal for the first 20 days is when this reversal bar prints, identify your large triggers. They should be favorable, one on top of the other. And then identify the window within those triggers from the highest point of support to the lowest point of support. Give me a Y in the room if you're with me on this. You're going to have to practice it for it to be second nature. Cream white, this is that trust process. Identifying the best of the best and then practicing it over and over. Two potential scenarios, guys. The market doesn't make it to your window. That's not your money. That doesn't fit your rules, therefore this isn't your trade. The other potential is that it comes to your limit order and you're in that long position with all of those advantages, right? From the top of the window. But it's a window. I want you to be ready for the fact that it may go to the bottom of the window. I want you to be okay with watching your P&L go against you a few ticks. But here's the great thing about this methodology, guys. With the advantage of momentum and a clear path, with this determining where the market is most likely to continue based on 20 years of study, repetition, simulation, live trading, we can identify where the market shouldn't go. The market shouldn't go, if the trade's going to be successful, outside of that window of opportunity. And this is where your protective stop goes. This is how you manage risk as you get into a trade. We don't sit and hope. The typical futures trade is going to have 12 to 14 ticks of risk. 12 to 14 ticks of risk is typically about $120 per contract, give or take, depending on the market. If this market pushes beyond the window, we want that stop there. We're out of this trade. No longer in it because we've lost the advantages. And guys, this is a trade that wins typically 70 to 80% of the time. Whoops, I always do that. 70, 80% of the time. So you math whizzes are going to recognize that this is a trade that's going to lose 20 to 30% of the time. If you take 100 of these trades, you're going to lose 20 of them. If you take 10 of these trades, you're going to lose 2 or 3 of them. It's a normal part of a positive equity curve. So the idea as a brand new user isn't to focus on the wins and losses. It's to focus on the advantages. What are the advantages that I had present? Did I take the trade? Did I have momentum, a clear path, in an entry area? You're going to understand that you do by writing those advantages on every picture that you take, every trade that you take. This trade has odds favorable momentum, so I'm going to take the time to type out odds favorable momentum or strong trigger lines, and I'm going to point an arrow so visually I can police myself. No termination conditions. Price didn't reach this area. It's below it. These become targets, not terminations. So I'm writing it out and I'm pointing to the top of that one bar that gives me this great information, reminding me what it means to not have reached a termination condition. And then for my entries, and this is going to be the most important for you new guys, this is where the trust comes in. Mid-band, inside of favorable large triggers. I'm using the verbiage so that I can relate the advantages to the visual. And Fibonacci resistance becomes my target. Identify your rules being met. And then take time to write. Were you nervous? Were you confident? So cream white, Sydney, John, if you posted this picture in the room, would there be any doubt in my mind what you saw? Would there be any doubt in your mind if you went back and looked at this picture tomorrow why you took this trade? Guys, this is how you develop trust. When you take this trade, when you write these rules, when you get that feedback, if it is the high probability trend trade and that's the one that you're going to follow, put it in your spreadsheet, right? Create a hyperlink. Whoops, I didn't create one. and come back and study it tomorrow and say, this is the trade. I got feedback, I got confirmation, this is my highest probability trend trade, this is my best chance of success. This trade has 3 advantages that are going to work themselves into my trading plan for the rest of my life. 20 days focused, guys, that's all I'm asking for. It's not a long time. There it is again, right? So let's do one entry together. This is for my brand new users, and let's pull all the noise off. And let's get rid of those cheating circles, right? All right. We start on the large chart. Cream White, John Hellam, Roel, Sydney, Tim. What direction is the trend, guys? Give me a U or give me a D. Remember, we're using one bar on this large chart. We're using the most current bar. It's up. So I just took 50% of the trades out of the equation. I know that I'm looking for rules to be met for high probability trend trades long. My first rule says that I must have strong triggers. Strong triggers mean that my small are above the large and that there's space between the two. Do I have strong triggers? What do you think? And guys, we do it slow initially, right? Because if we recognize it when it's not moving, it becomes easier to recognize it when it is. All right, so I have strong triggers. I'm in an uptrend. Remember that equation. I want you to ask yourself, has price reached an area? Has price reached a fib? Yellow 1-to-1s, a divergence high? Has price reached an area? That's the question that you have to ask yourself. Do I have a clear path, guys? Is rule number 2 met? And if you're not sure, let me know, and let's go back and review one more time. You don't need to understand the 1-to-1 to use it effectively, but let me go through. And thank you for that. What is a 1-to-1? A 1-to-1 is a 100% Fibonacci alternate. And Roel, I'm going to be real honest with you. I suck at math and I'm not a tech guy. So this is as in-depth as I can get. The distance from A to B is measured by your software. When it creates this C pivot, all a 1-to-1 is it's projecting the same distance from A to B. It's projecting into the future where D is likely to happen. That's the same distance from A to B equals C to D. Institutional traders, people that do this for a living, they use these 100% Fibonacci alternates. So what it is it's like a Fibonacci line that prints in the moment. So we respect it the same way that we respect a Fibonacci line. If price reaches it and the trigger lines don't break it, they stay below, now we have a termination condition, right? But it doesn't matter what the math is to create it. This is how my brain works. It matters, in Sydney, here we go, rule number 2. It matters whether or not, whoops, wrong one. Price has reached it. Sydney, the first thing is price makes it to that area. When price makes it to the area, in this case, it is in fact one of those 1-to-1s. Notice how the trigger lines stay above it, Sydney? Everything's trending down, the momentum is down, but when it hits this, the triggers are above. That's a termination condition. That's a textbook termination condition. Price pulls all the way up to resistance. See how the bar hits it and the triggers are below? There's your textbook termination condition. So here, price hasn't reached anything, right, guys? So I have a clear path. I have odds favorable momentum. I'm in an uptrend and I have a clear path. Give me a Y if you guys are good with this so far. This is the precursor to looking for an entry. Now I have the information I need to turn my attention to my smaller, faster chart. What am I noticing on the smaller, faster chart? I have odds favorable momentum. My smalls are outside of the large and my large are wide and angled in the direction of the trend. Guys, it's nothing more than a confirmation of the momentum over here. It's beautiful. Both charts, small and large, say the market's likely to continue. Notice that my large triggers and my synthetic triggers are overlapping, one on top of the other, coming up like a shark about to breach. Not only do I have strong triggers, I have favorable large triggers. And I'm looking for areas. I have blue Fibonacci support, and I have a green midband. So the recipe's coming together, guys. I have my areas, and I have my favorable large triggers. But remember that rule number 3 says that we are going to buy a pullback, a small retracement in price, going against that uptrend, going against that momentum, going against that clear path. And that pullback, let me show you how the process is going to work for you. This chart is going to push up, and it's going to push up. And new users are going to feel anxious. It's going without me. Oh no, what do? Should I jump in? Or can I wait for a reversal bar? This reversal bar signals the beginning of a pullback, guys. This reversal bar signals that small retracement in price counter to the underlying trend. But I have one-to-ones on my 5-1 chart. Guys, is this a termination condition? This is going to trip up you new users initially, or are areas defined on the large chart? It's not. Absolutely, cream white. Because termination conditions happen over here. Do you know what these one-to-ones are? These one-to-ones are a speed bump in the road that I'm hoping give me a push back to my areas inside of favorable large triggers. Thank goodness for the one-to-ones. So at the time of the reversal bar, I'm going to take my drawing tool and I'm going to identify the top of my triggers all the way to the bottom of my triggers. That's a huge window, right? But rule number 3 says that I am going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, which means that I'm going to refine this broad stroke. I'm going to identify my highest point of support, which happens to be a midband. And I'm identifying my lowest point of support, which happens to be Fibonacci support. And guys, this tiny little white box is the area where the market is most likely to continue. Give me a Y if you're with me. Reversal bar prints, identify the areas inside, and then all you have to do, I don't know where the market's trading right now, let's find out, is activate a limit order right at the top of that window, a tick or two above the highest point of support, because this momentum is absolutely cranking. Ron, stay safe. Have a good one, man. John survived it last night, so I like your odds. Guys, there's your limit order at the top of the window after the reversal bar with the rules met on the large chart. And here it comes. Each bar gets closer and you start getting nervous. I hope it gets me. That mid-band's coming up. It's okay to click on your limit order. Move it up a couple ticks above it, right? Because this momentum is strong. And here it comes. And here it comes. Oh, and we're in a trade at 45.0550, guys. You're in a long position. Right inside that window. You're in a long position with the advantage of momentum, with the advantage of a clear path, and having waited for the area inside of favorable large triggers. Your initial stop goes where the market shouldn't, outside of that window, below those large triggers. Give me a Y if you're comfortable so far. We're in the trade. The advantages are present. Our stop is where the market shouldn't go, and this is acceptable risk with all of those advantages. And the market, what's it going to do? I don't know what it's going to do. Oh my gosh, it's going against us, guys. I'm looking at those little red numbers, and it's negative 50 bucks. And it's negative $75. And this is where new users begin to panic. And cream white, this is where that trust comes in. Do I trust the advantage of momentum? Do I trust the advantage of a clear path? Do I trust that this box is where the market is likely to continue? Because if you do, very often you get a reversal bar in the direction of the trend. And I want you to see this. We were in at 0550. When I get that reversal bar, I'm 2 ticks below it. Now I have six ticks of risk. My advantage has stayed in place. Check it out. There's your tail. And where does that tail go? Guys, excuse me just 1 second, please. Hold on. I'll be right back. Don't want to miss an opportunity to say goodbye to my wife. So remember, we're not trading tails, right? We're trading that pullback. This pullback is the tail. Watch this. If I circle that one bar on my large chart, look how it highlights everything over here. Look how the bottom of that tail, that lowest price, is right there inside of the window of opportunity. Pretty cool, right? It takes a while to trust this, guys. It's hard to sell a market when it's going up, and it's hard to buy a market when it's coming down. But if you go through and you do this historically, if you circle these tails and see if they line up, it does create that patience. And watch this. All those advantages, that's a pretty good morning, wouldn't you say? So now you just wait. You wait for those advantages because those advantages create opportunities for you to win more than you lose. Those advantages create an opportunity for you to take a trade that has the highest percentage of winning that Nexgen teaches. And you take that trade that's based on odds favorable momentum. And when you get the reversal bar, look at this. There's support inside of favorable large triggers. The path is clear. That's a pre-trade picture, ladies and gentlemen. Odds favorable momentum. I haven't reached an area, so the path is clear. I got a reversal bar, so let's do it together. There's the top of my triggers. There's the bottom of my triggers. There's my highest point of support. There's my lowest point of support. Give me a Y in the room if you see it. Your only goal for your first 20 days, guys, is to be able to put that limit order in the right spot. Why? Because great entries create manageable trades. So now I'm going to give you some tools to help you do it. Cream White, Royal, Sydney, Tim, embrace the idea that this checklist keeps you honest. It keeps you focused on advantages. These rules are the same rules I want to see written on your chart. Is the market coming from a termination condition that created a full reversal? If you put that it did, but it didn't, then it opens up the door for me to have a conversation about strong tops and bottoms. Did you have odds favorable momentum? If you didn't, but you put that you did, it opens up an opportunity, guys, for a conversation to give you clarity. Same thing with termination conditions, same things with the entries. This is your beginning step, guys. This is the best of the best. This is a checklist that I've never had anybody follow to the letter and do worse than 70% winners. But it takes a little time and it takes a little repetition and it creates a little bit of trust. Thank you for that. News in 3 minutes, guys. I'm going to give you the same checklist with the same rules, identifying the same advantages with pictures that I stole from the resource materials. You might recognize this picture of a termination that creates a full reversal. There's your strong bottom. There's that odds favorable momentum, and there's those anything can happen triggers. There's your recipe for termination conditions, and there's identifying when the path is clear. And here is the full formula for identifying that window of opportunity, guys. Everything you need in pictures. So you've got the written, print this out, put it on your desktop, use it as a checklist every time you take a trade. Use the pictures for a small review before each day in the first couple weeks, right? Arg, it didn't come get me. It must not be my money. And then finally, I'm going to give you guys what I think is the most valuable tool a new trader can have, and that's a trading plan. Without a written trading plan, you don't have a plan. And if you don't have a plan, you are subject to emotion. You are subject to opinion. You are at the mercy of hope, wish, and want. My father-in-law used to say wish in one hand, poop in the other, but he didn't say poop. See which one fills up first, right? So guys, this is a stepping stone in your learning journey. This is an opportunity for you to have the highest chance of success as a brand new user. This is an opportunity for you to learn how to read your charts, to recognize advantages, to create the most solid foundation so that you can grow. It's designed to optimize your chances of success with that high probability trend trade, and it's even going to introduce you to a trade on those areas with the potential to break. But through simulation and study, class feedback, and continuous practice, repetition, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. So what I'm saying is that you won't be here forever. You're not going to be stuck to this plan. But if you're not consistently winning more than you lose, this plan gives you a recipe to put yourself in that position. If you're not completely trusting in the methodology, this plan is going to help you to develop that trust. And it begins with never fighting the large sugar direction or the triggers ever. Don't fight trend, don't fight momentum. Abdul Aziz, I'm not going to look at your picture yet, but I'm asking you, are you asking me how to break your rules? Because if your rules weren't met, are you saying, hey, Mark, how do I break my rules for an entry? The entry should be at the top of the window. Purple one-to-ones, Abdulaziz, aren't one of the areas that we use for entry. The areas that we're using for entry are going to be those Fibonacci support, Fibonacci resistance, yellow one-to-ones in a mid-band. Those purple one-to-ones are small swings, and on a small chart, they rarely do what they did in the picture that you just showed me. So in this particular picture, we're looking for those one-to-ones, we're looking for those mid-bands, and you know what? It didn't make it. So do I have a rule for this trade? I don't. I don't have a way for you to get into this trade, especially with a loss of momentum that makes me feel good at jumping in at the top. Does that make sense? But guys, let me show you how plans are built. So Abdulaziz, I'm not just going to tell you no, we don't have a rule for it, right? Because, well, there is no we. It's got to be you. So let's do this. What if I took this picture? What if I took this picture? PFI, you can do anything you want, my friend. And I said, I have the strongest look of momentum that I could ever hope for. I have absolutely nothing in the way. I have the strongest triggers and the most favorable large triggers and nothing in the way, and life is good. And then Abdul Aziz, even over here, everything says up, right? So can I take all of these advantages and say to myself, if I enter at these purple one-to-ones, I am okay, comfortable, and I accept 100% that my risk is all the way down here. My risk is almost 4 points down here. So Abdulaziz, we build a plan based on repetition, through study, through trust, right? So I'm going to tell you, I'm not going to tell you that this fits a high probability trend trade, but what I'm telling you is that if you see this look 50 times and it wins 40 out of the 50, well, then you may have identified a pattern that brings you success. I don't even have purple one-to-ones on my chart because I'm doing my analysis on NinjaTrader 7. So all I saw on my chart is that I had a loss of momentum through divergence, which made this area the most likely spot for continuation. Does that make sense? And guys, this is how plans grow. Plans grow because Abdulaziz, you're going to see this look so many times that you're going to say to yourself, you know what? I'll fudge my rules just a little bit because my chart reading creates acceptable risk and I'm willing to take it. And I can tell you that there's people that take this trade off the purple 1-to-1s. But for the sake of brand new users, I have to say it just didn't make it to the area. It's not your money yet. It's not your trade yet, but it may be one day. Abdulaziz, scroll back and see how many times that works, right? And if it gives you a statistical advantage with the rules met, I wouldn't be opposed to working it into your plan. But make sure that you're doing the study. Make sure that you're going back and you're creating a plan for yourself. And until you have the wherewithal to create a plan for yourself, I'm giving you one. Don't fight direction or triggers, guys. It rarely works. Define your entry. What's it going to take to get you in? Was that an okay answer? It doesn't fit the high probability trend trade rules, but I think with a little bit of study, it may be a trade that you incorporate into your plan with acceptable loss. So John said that you can, but people keep blowing out Apex accounts. Weird. Maybe it doesn't create an advantage, PFI. Maybe it doesn't win more than it loses. Maybe it's an opportunity to avoid that fear of missing out with the hope that it continues with the trend. I personally, guys, try not to trade on hope. I try to trade on pragmatic mechanical entries based on a history of success because I don't get anxious when these rules are met. Every great entry, ladies and gentlemen, creates an opportunity for management. Every great entry creates an opportunity for you to do something with that trade. You guys have identified trend, and it took you no time at all to be good at that. And then you identified trigger lines and momentum, and it took you really no time to be good at that. This is the second bite of the elephant. Your third bite is understanding termination conditions. It's going to take a little practice, a little repetition. And then your fourth is getting those great entries, getting those wonderful entries, because those wonderful entries create manageable trades. This is that foundation. So if you're brand new and you're feeling overwhelmed, look at this picture. Can you identify trend? You're a quarter of the way to getting those great entries. Are you comfortable with momentum? You're halfway there. Now you spend a little time studying termination conditions. You're 3/4, 75% of the way to those great entries. And then you practice the entries, guys. It's like losing weight. Has anybody ever had 50 pounds to lose and said, I'm going to lose 50 pounds? And after the first week when that 50 pounds isn't gone, you said, to hell with it. This sucks. It's never going to happen. I've done it. But I was also a personal trainer for a while, and I realized through my own frustrations that if I used language that said, if I lose 1 pound a week for the next year, at the end of the year, I'm right where I want to be. If I lose 1 pound every week for 52 weeks, I've exceeded my goals. So guys, keep manageable goals from trend to momentum to clear path to entry. And then once you identify that entry using a mechanical approach, using a pragmatic approach, putting yourself in a position to have every advantage as you get in, take that same approach on your management, guys. Your initial stop goes outside of the window of opportunity, not because you hope it doesn't go there, but because you know that the potential is there, and if it does, you want to be out of that trade. So when you take that perfect entry, when you finally get to that best of the best spot, one of two things are going to happen. It's either going to go through and it's going to smack into your stop, and it's an acceptable part of a positive equity curve, or it's going to give you the reversal bar. And if it gives you the reversal bar, you're going to manage your risk even more. You're going to reduce your risk above that reversal bar. I see trades all the time where people get that best entry and their stop is in place and it's picture perfect, and then they get that reversal bar and they leave their stop in place up outside of that window, and they take a full loser on a trade that could have been a portion of it. So when that reversal bar prints, when the trade does what it says it's going to do, you have an opportunity to manage your risk. And at this point, there's nothing for you to do. You either get stopped out, small loss, acceptable losses, or it hits your first target. This super simple plan has your first target at $100. And if it hits that $100, you get paid. If it hits that $100 is in your simulated account. You start to develop confidence through the memory of success. Serotonin floods your body, dopamine floods your body, your sweaty palms dry up. You just got paid. You got paid because of the advantages, and you're going to move your stop to break even, and you're going to say, they don't get any of that money is mine. And you're either going to get stopped out break even on the trade, and it's going to happen, or it's going to go to your second target. And your second target is a simple $200, which is pretty easy to hit when everything is in place. And if it hits that second one, now you have even more confidence. And you're out of the market with $300 in your account. And this is nothing more than if-then scenarios. If I take the best entry, then my stop is where the market shouldn't go. If the market gives me a reversal bar, then my stop is 2 ticks above it. If it hits my first target, then I reduce my risk to 0. If it hits my second target, I exit the trade. Guys, it's emotionless. And what it does is it's going to help you create more winners than losers. This is your plan for success in the beginning, guys. This is the beginning of your road to becoming a successful day trader. Recognizing the advantages and entering at the correct spot, that's that piece of the puzzle. That's the first part of the equation. And then you're going to learn to manage it. Every great trade, every great entry creates a manageable opportunity, and your days of $300 trades are limited because you're going to go back and annotate every one of those charts, and you're going to say things like, these strong triggers suggest the market's going to go to that next Fibonacci area. Therefore, I'll hold one contract for that bigger move. Everything says down with strength. There's no reason for me to exit because the large chart leads the way. And you start turning $300 trades into $700 trades, $500 trades, $1,000 trades. But if you're not getting in at the best spot, if you're jumping in too early, right? If you're getting in too late, getting in early doesn't guarantee a winner, guys. What it does is it guarantees a bigger loser if it doesn't work, right? So focus on the best of the best initially. Give yourself every opportunity for success and consistency. There's also what we call the 50-50 trade on there, those areas with the potential to break. It gives you a set of rules. So I'm going to give you guys both checklists, and I'm going to give you this simple plan. I can't make you keep it simple, right? I can't make you do anything. Good morning, guys. I can't tell you to follow rules. I can't tell you to break rules. All I can do is take the pictures that you present in the class and offer my feedback on it. Do a chart read, help you with your chart reading, help you build a plan, but it's going to be ultimately up to you to create a plan that suits your needs. So I've created a template to help you create your personal plan. And each time you add a new trade, a new look, and take that simple plan and make it your own, you need a new scenario to make sure it's repeatable and testable. Your results should produce a trade that has been proven to win more than it loses, therefore providing a statistical advantage. So Abdul Aziz, I want you to take this template and I want you to define your entry rules. It's essentially a high probability trend trade, right? So you're identifying the large trigger strength, the no terminations, the small trigger strength. But now you're adding something to it. If I have purple 1-to-1s inside of favorable large triggers, I'll take the trade. Take 10 pictures of longs, take 10 pictures of shorts, and create that basis to add to your plan, guys. And this template's going to let you do it. This template is going to put you in a position to where you're forcing yourself to do the study. You're forcing yourself to get that repetition. And what you're doing is you're proving to yourself that your suspicions are true, that this is in fact your trade, right? So if you're taking momentum trades, go through the process. What's your perfect look? What does it look like? Create a checklist for a momentum trade. Create a checklist for trading that gap. Create a checklist for catching that first trade for that HVA. Odds favorable momentum carries us to the area. And damn it all, we didn't get an entry, right? Whoa, that's my untitled workspace. Sorry, guys. Let me close that one real quick. Termination condition has the market rocketing down. Give me a Y if you see, oh my gosh. From resistance to support to resistance. Were there any opportunities in there? Maybe. From support to resistance. I wonder if with all that momentum and the small trigger smashing through, was that an opportunity? The first one was it pulled right back to support inside of triggers and it went all the way up to that area of resistance. When we reached that area of resistance, none of my trigger lines broke through and I knew that that was an area that could stop the market. That's probably where I took profits. And now I'm waiting to see, is this termination going to create the full reversal? Is the full reversal going to give me odds favorable? Is the odds favorable going to give me the potential for a pullback to an area inside of favorable large triggers? Every time I read a chart, I go through that process. This is the NASDAQ. Do I have odds favorable momentum? The smalls are above the large. It looks like they're accelerating, doesn't it? My large triggers haven't made it through the area yet. I don't have a clear path. And oddly enough, I don't have strong triggers over here. And my areas are falling outside of the favorable large. This is a transition phase. This is buyers and sellers fighting at this area. This is a little bit of overrun on a fib. NASDAQ will do that every now and then. NASDAQ will create scenarios outside of the norm sometimes. But the S&P is lock, stock, and barrel right on a termination condition. Because they're both, every chart looks similar, right? It's just buying and selling PFI. That's all it is. So what is the NASDAQ? NASDAQ is how many stocks put together? I don't know. A lot. The S&P 500 is 500 stocks put together. They're both conglomerates of stock portfolios. And people are speculating on them. More people speculate on the NASDAQ than they do the S&P, which is why NASDAQ moves faster than the S&P. There's more opinions. More opinions of going up, more opinions of going down. Sometimes, if you can trade it, look at your S&P. Mid-band holds, resistance to the tick, support to the tick on the pullback, straight from support on the tick, right? S&P is very smooth, it's very fluid, it's very, very focused on the areas. The NASDAQ, while it's an amazing chart, is like your methed out cousin drinking Red Bulls, and it overruns areas. So while the rules are the same, while odds favorable is the same, while no termination conditions are the same, NASDAQ has a different personality, guys, and it's easier for you to learn to trade using crude oil in the S&P. There's plenty of opportunities there. The markets move slower, more fluid. PFI, I do use market flow. But I don't use it for anything other than confirmation. And I had this talk with someone earlier. The majority of Nexgen users believe that market flow is a magical chart, the 8 range chart, guys. They think it's magical. They think that it's going to create more opportunities. They think it's going to give you all of these extra trades and more money, but it doesn't. It's only confirmation. That's all it is. Live charts, guys. Smalls below the large are wide. They're angled in the direction of the trend. Odds favorable momentum. If I get a pullback, can I identify my lowest point of resistance inside of favorable large triggers? Some examples of what, Abdulaziz? Market flow confirmation. Sure. Do you guys want me to tell you how I use it? Or do you want me to tell you what you want to hear? No. You can't have my rules. They have to be your rules. You don't get my rules, PFI, because I'm 3 years ahead of you. Let's look, guys. You ready? Let me tighten up my 13.2. Let me tighten up my 5.1. I will. I'm going to show you exactly how I use it, and I'm not even going to hesitate. Are you ready? When we were looking for the long trade with odds favorable momentum and no termination conditions and everything set up on my large chart, my small chart had favorable large triggers. My small chart had an area inside of favorable large triggers. My small chart was strong. Right? Do you need market flow to identify the rules being met? So the answer is no. So how do I use it as a confirmation? PFI, what does the momentum say on the market flow chart when my rules were met on my higher time frame? No. Look at the box. Odds favorable momentum, right? Abdulaziz, odds favorable momentum. It's a confirmation of what my rules are telling me. So let's scroll back. When everything says up, when the momentum is its strongest, let's find it again, guys. This is how you learn to use market flow. And I'm happy to teach it. So there it is on my 5.1. There it is on my 13.2. PFI, do you need market flow to confirm? Not so much. But what's it say? Can we identify that market flow has odds favorable momentum? Guys, this is the first thing that I want you to do. If you're going to incorporate market flow, get rid of all the noise, stop trying to understand every bar, and make the decision on whether or not you have odds favorable momentum. Because what does this mean? This means that all three charts agree. Give me a Y. Anybody using market flow, give me a Y and let me know that market flow's first use is a confirmation tool to help you identify and just say, you know what, Mark? Great read. Look at that momentum. Nice job. Does that make sense? You guys think that it's going to create these opportunities that don't exist, but it doesn't. It's a confirmation tool. So let's load market flow back on. What's the second way that we're going to use market flow? I'm going to show you. But before I show you the next one, I'm going to go to the market flow chart, guys, or to the section. Man, this is going to piss you guys off. It always does. This always makes somebody upset with me when I do this. Market flow signals defined when your rules are met. When your rules are true. And notice that it says when your rules are true, and then it seconds it. When trend trade rules are true. When tops or bottoms are true. So you'll have the next one. And I'm going to show you, hypothetically. Hey, Tim, have a good one. Do you guys notice how the large triggers didn't make it through yet at the time of this trade? So this area has the potential to break, right? With all that momentum, with that good bottom, but it hasn't broken yet. And you're saying to yourself, you know what? If the area is not broken, well, then that path isn't completely clear. And if that path isn't completely clear, I want some confirmation to take this trend trade. Are you guys following my line of thought? Because the large triggers haven't cleared, I'm identifying a potential problem, an issue, right? It may be a little bit of overrun like we just saw in the NASDAQ. But I have odds favorable. I'm 90% through. I have strong triggers, and I'm saying to myself, you know what? This is where the market's most likely to continue, but it's important to me to get a little bit of confirmation at that area. I don't want to just jump in. This is where a market flow signal can help you take a trade. You identify the area, and if you get a market flow signal from the area, this identifies, yep, it gives you a little extra confirmation that this area is likely to hold. That's all it is. It's confirmation. The rules have to be met. This is confirmation of the area. Well, what does confirmation cost? I want you to see something. This is your area, right? Here at 504.50, 75. Whoop, even higher. That's your market flow confirmation, which means that you're into this trade 2 points higher than the actual area. You're into this trade 2 points higher than the actual area, which means that your risk is 2 points greater until that reversal bar prints. Does that make sense? There is a cost of confirmation. But here's the most important thing, guys, is when people start going into market flow, they're like, I'm going to use market flow because it's magical, because market flow gives me advantages. This is what I did. This is how I know. All the pain that I've felt, guys, I'm relaying to you. And this is what I did when I got market flow. I think that's an area, or I think that's a signal, I'm going to go long. And then I'm like, oh no, wait, that's a signal. Oh, hold it. That's one of those signals I saw. But so is that. But dang it, so is that. That might be too. Ooh, that's one of those bars. Shoot, so is that. But that's one too. Damn it, that's one. Ooh, but there's one. That's one. Hold it. I think that's one, right? So this is what happens to the new users, which is why I go back to your rules have to be true, guys. Market flow won't get you into trades that aren't supposed to be trades. Market flow will have you focusing on a chart that isn't providing those three advantages. So use it for confirmation. Let your rules be true. And then let's say hypothetically, you're looking at one of those trades where the market has the potential to break the area, but it hasn't broken yet, right? And let's minimize a little bit. Let's see what happened. I don't think this gave an opportunity, unfortunately. So I have anything can happen triggers, but I have a clear path. And I'm saying to myself, I wonder if the midband's going to be a short. I might say to myself that with this clear path, everything says down. If I get to the area on my smaller, faster chart and I get confirmation, well, maybe I'll take a shot at the trade. So it might help give you a little confirmation on those medium probability trades. I don't know what that is, Cream White. You can use anything you want, but I have absolutely no idea what that is. What a lot of new users don't realize is that I have the benefit of knowing absolutely nothing. I have the benefit of having never traded outside of Nexgen. So guys, look, you're at your mid band, right? It's not a high probability trend trade, but everything is clear of the areas. This is where some users will say, you know what? Maybe, maybe I'll take a shot if I get confirmation right at this point. Does that make sense? Not a high probability trend trade, not an area inside of favorable large triggers. So I'm breaking two rules, but you guys will go, oh, but look, there's a market flow signal maybe. And it doesn't happen, and it's at the area. And then you'll just sit here and wait for a signal over and over, even though the rules aren't met. So use it for confirmation. Well, it already happened, PFI, but yeah, in the moment, that is great. Confirmation is the word I use all the time. That's a perfect termination condition, isn't it? When price reaches the line, so what's the recipe? Price reaches the area, no trade, and it's not until it gets to the other side that it's clear. So what you showed me was a termination condition right here and one right behind it, kind of double stacked. And then it clears the area, and while everybody's thinking I want to go short because I didn't get paid on the way down, notice that there's no areas inside. Notice that there's not odds favorable momentum. And even you guys that are trying to cheat with the market flow, it just kept pushing up, right? It's a weak bottom. But now the smalls are above support. It's just not a rules-based trade. It may become a rules-based trade one day for you. But in the beginning, your rules weren't true. So that market flow should never work its way into the scenario, guys. That market flow should never work its way into the scenario if your rules aren't true. Does that make sense? So if you want to use it, if you want to use market flow, the first thing that I'm going to use market flow for, use that template. Use it to confirm momentum. At this midband that you guys want to go short on, notice that the smalls are up and the large are down. There's a lack of confirmation, right? Keeps you out of hoping. You said, why do we kill the trade if we are 10 ticks away from the termination? Who's we, PFI? Who are you trading with? That's one of your rules. Show me an example of where you read it. If you're 10 ticks away, don't trade. So what does that mean? Does that mean that price is 10 ticks away, or does that mean that your entry is 10 ticks away? Which one? Because it's two very different scenarios, isn't it? If your entry is 10 ticks away, well, do you have room to make money to that termination condition? No, it can't be both because they're two very different scenarios. And let me show you why. Let me show you why. Let me grab a picture real quick and I'll show you exactly where I'm going with this. And hopefully this is helpful. Are you ready? Bum, bum, bum. This is the perfect picture for that. Let me show you what I mean. The distance between the top of the bar and the potential termination condition here is about 8 ticks, right? 8 ticks. But price hasn't reached it. It's just a target, isn't it? And this, for me, develops a little trust, too. The only way you can place a buy limit cream white is if it's below price. Otherwise, it's going to prompt you for a sell limit. The only way you can have a buy limit is if you are below the current price. Because if you put a buy limit up here, it's just going to put you right in the market because you've already gotten there. So PFI, the distance between 97.13 and the top of that bar is 8 ticks, right? So you're thinking to yourself, I can't take a trade with 8 ticks. That doesn't even make sense. Who would do that, right? But PFI, you're not trading from the top of the bar. You're trading the pullback. And the pullback's at 85, which means that you are at 28 ticks. Does that make sense? It may be 8 ticks from the top of the bar. Well, if price hits the target, it's a termination condition. 2 ticks away, you have to make a call. 2 ticks away, it's up to you to make a call. I can't make that call for you. What I can do is educate you on how fibs come to be. And that's okay. But PFI, doesn't it make sense that you may find situations where you're okay taking that trade? Maybe not now. But guys, this is how your fibs became fibs. Thousands of calculations, every swing in the market, up, down, projection, alternate, creating thousands of Fibonacci retracements, thousands of Fibonacci alternates. Your software weighs them, they sort them, and what it does is from all of these lines, which lines are the most important? Where's the highest concentration? All of those lines create these lines. These lines are areas. So let's ask ourselves, PFI, if I am coming, let me see if I can find an example of where that happened, because I think I saw one earlier. Ah. All right. So PFI, if I'm coming from a termination that creates a full reversal, if I have the best momentum look ever in a clear path, and I'm 2 ticks off of this line, and I get the perfect low risk entry inside of favorable large triggers, are there enough advantages in place through my chart reading, through repetition, to say, you know what? I'll take a shot with all of that momentum coming from a termination that creates a full. Let's say hypothetically it pulls back 2 ticks before the area. And I'm looking for an exact where that's happened, but of course I'm not. So you'd say, no, I won't take it, right? Totally cool. You know what I would say? I would say absolutely. No. If I'm 2 ticks away from an area, but I have every advantage on every chart confirmed across the board, I might rely on momentum to get to that area. But it depends. Fibs are areas. Fibs are 3, 4 ticks that come together to create one, right? It's an area. One-to-ones are an exact measurement. Divergence lows are an exact measurement. So this is an area, and sometimes areas overrun. And this is an area, and sometimes areas overrun. So you're asking, there's going to be things that I see that you don't see. So why worry about when rules are almost met? Give yourself a little bit of grace, PFI. Let it be simple in the beginning. Let it be rules met, or let it be rules not met, right? Take that pressure, take that burden off of you. This is a 50-50 trade. This is the smalls are through, the large are not, therefore the areas aren't broken. It's not coming from a termination condition that created a full reversal. and I have a loss of momentum. If I'm using the most simple plan, that plan that I gave you guys in the room for that 50-50 trade, it says that if divergence prints, I'm not taking the trade. So PFI, your first approach to this is that this isn't a trade. It's not from a termination that created a good top or bottom. It's not from, or it doesn't have a, like strong triggers, no divergence, right? So your simple rules say that this isn't your trade. Does that make sense? But if you see this look 100 times, you may say, with this much momentum, with this solid base, with these strong triggers, and with this tiny little window of opportunity, I'm willing to give it a shot. Where's divergence? If you see divergence print on your large chart, divergence prints 3 bars later. So this divergence didn't print until this bar. On which pick? The rules are the same. If price reaches it and the triggers don't break it, it's a termination condition. That's it. Other than that, it's just a loss of momentum that happened at a pivot. Is that the S&P? That loss of momentum happened at 9:31 a.m. At 9:31 a.m., let's talk about what divergence is. At 9:31 a.m., the sellers tried to push everything down, and the buyers told them to go to hell. Not only are we pushing the other direction, but we're stealing your momentum. Does that make sense? And it wasn't an area that they did it at. It was literally at 45.0575. At 45.0575, the buyers said, no more. That's it. They created a line in the sand. So when the sellers reach that line in the sand, you have the ability to see, I don't know what volume means. What is price and volume? Divergence isn't volume. Divergence is momentum. At this price, the buyers put a line in the sand, right? At this price, the sellers put a line in the sand. This is why we respect them as potential termination conditions, because this is the exact price, not the almost price. This is the literal price where the line in the sand came to be. Does that make sense? The only thing, I'll tell you the calculation because I won't hold back. But the only thing that you need to know regarding divergence is that when this prints, when this prints, when this prints, and when that prints, when that line comes to fruition, whoops, let me use a call out. When the line prints, momentum did not follow price. I love these questions, by the way, because these are great questions. There was a loss of momentum at an exact spot. Does that make sense? No, you're good, man. You are so good. So this is how I look at divergence, guys. It either is or it isn't, but it's an exact line. It is a 100% specific to the tick area. And people forget about them for terminations because they're so focused on fibs and one-to-ones. But anytime the market has a divergence, low or high, that line represents a specific point in the market where not only could the in control force, buyers going up, sellers going low, not push any further in their direction, but they also lost momentum there. It's like a line in the sand. And often they'll try to exceed it again, and that's what gives us that pivot stop out. It's a key price where the failure has already happened. And that's why you see so often, and there's that line in the sand, and look at the reaction. There were sellers waiting once again, right at that key point. And there's that line in the sand, and there were buyers just waiting to give them grief, right? There's that line in the sand, and look at the reaction, and it coincided with Fibonacci. So all we're using it for is we're saying, hey, the market may bounce here, just like a fib. But when that termination creates the full reversal and you have this much momentum, it's less likely that that line holds. And that's where we use the laws of termination conditions. We've identified it. We let the triggers get through it. We identify the momentum. And look how this pivot stop out, this termination, took the market all the way up to that next key area. You guys know where these areas are so far in advance. What an amazing advantage to have. If you decided to take a shot on this 50-50, Abdul Aziz, did your market flow chart confirm the momentum to the upside at the time of the pullback? Do you see it, guys? 50-50, right? There's that trend trade. There's my areas. How do I use market flow, Mark? My rules are met is my confirmation. Yeah, and that's how we use it, guys. Here's your aha moment, market flow users. And let's say, hypothetically, that because of the divergence, you wanted one more level of confirmation. Let's see if there was a market flow signal to initiate a trade at the area inside of favorable large triggers. This is your market flow lesson. There it is right there. And it didn't give it to you until the second push. But watch this. That's where we expect it to continue. There is your yellow reversal bar. That's your market flow signal. Right at the area saying, you know what? There's my confirmation piece. And your confirmation piece cost you about 2 ticks, 3 ticks. Does that make sense? See how it starts here. And then we identify here. And we confirm here. Isn't that awesome? PFI, did that help you on those termination conditions a little bit, I hope? On those divergence highs? So there's 2 losses of momentum, right? I'm sorry, PFI. And now we have odds favorable momentum, smalls below the large. Is it the PC or is it NinjaTrader? There's a big difference between the two. Smalls below the large are wide, they're angled in the direction of the trend. I haven't reached an area. If I get a reversal bar on my smaller, faster chart, I can identify a window of opportunity. That's it. If I get a reversal bar, my lowest point of resistance is a midband. My highest point of resistance are these 1-to-1s. The only thing I need right now, guys, is a reversal bar. It's either going to give it to me or it's not. I'm not in control of that. Pretty cool, right? Rinse and repeat until you have trust. Guys, I'm going to take a break. It's almost 11 o'clock. Holy smokes. And let's go to the next side. What would make me cancel that order? If price reaches Fibonacci support, it'll be a termination. Until it reaches it, it's just a target. So right now I'm only 10 ticks away, PFI. There's your example. But from my potential entry, I'm 30. Pretty cool, right? It's trying to make that reversal bar. That small crowd is trying to fight. There it is. There's my reversal bar. From the bottom of my triggers to the top of my triggers, from my lowest point of resistance to my highest point of resistance. From 69 to 78, guys, that's the area where the market is most likely to continue. Notice that it's not only areas inside of favorable large triggers here, it coincides with Fibonacci resistance with all trigger lines below it. Your job as a brand new user, Cream White, well, Sydney, Tim is gone, is to get comfortable with the idea that this is the point where the market is most likely to continue. Either your rules are met or they're not. Pretty cool. That's it. It's awesome, isn't it? Over and over, guys. Rinse and repeat, rinse and repeat. So what you can do is you can take this picture right here before you ever get in the market. Use the call out. I'm in a downtrend. And write why. Background is red. I have strong triggers. No termination conditions, right? Write the reasons that you're looking for this trade. Write why it's good. Background is red. Strong triggers. No termination. And then use the language because it's going to create advantages for you. I'm looking for the pullback to resistance inside of favorable large triggers. And then if you're struggling with it, this is a target, not a term, because price has not reached it. And how's that for a slew of lessons, of chart reading lessons in one picture? This is why pictures are so important. In one picture, I've gotten all this information. In one picture, I've confirmed my ability to read a chart. In one picture, I've identified all of the advantages. And in one picture, I can take it and I can put it into my personal trade looks, right? I can take that link and I can paste it in there and I can call it perfect setup. So I know exactly what I'm looking for every day. How long is it going to take you to get to where you want to be, guys? Everybody wants to know that. Well, when can I expect to make money? When do I get to the point to where this is all second nature? If you embrace the path. If you embrace the idea that you have to do this foundationally. If you embrace the idea that focusing on the best initially is going to give you the highest chance of success. I've seen people start to find success in the first week. I've also seen people fight the idea that momentum helps. Fight the idea that termination conditions are bad. Fight the idea that waiting for a pullback is your best chance of success. And I've seen them take months. I've seen people take years fighting it. So, guys, I fought it. I fought it for 3 months. I robbed myself of 3 months. And then I half-assed it for another 3 months because I have a huge ego and I'm stubborn as all get out. My brother wrote the software, guys. I have been watching Nexgen in some form or fashion for 25 years. And I still fought everything that John Novak told me to do. So how do you get to where you want to be ASAP? Embrace the path. Post a million pictures, ask a million questions. Keep it simple, keep it focused. And you'll get where you want to be, and I won't abandon you until you do. As long as you keep participating, I'll keep giving you feedback. As long as you keep posting pictures, I'll keep identifying advantages. As long as you keep filling up your spreadsheet, you're going to recognize patterns over and over. And then your chart reading will take you to the next level. You'll be able to identify all that momentum and you'll say to yourself, well, if it's not going to give me the pullback, I'm going to take quick profits with all that momentum because strong triggers make it to the next area. This is Ron's trade, guys. He sat in my class and he learned about the high probability trend trade. Ron, I'm going to put your business out there. Stop me if you need to. He sat in class as a brand new user and he said, you know what? I'm going to learn how to read my charts. I'm going to understand momentum. I'm going to understand terminations. I'm going to get that clear path. And I'm going to focus on the entry because I'm getting this foundation. And then one day Ron said, man, my chart reading tells me that when my large chart is this strong, there's opportunities in the middle. There's opportunities to get paid beyond the high probability trend trade. My chart reading says that when everything is this strong, I can take little nibbles, little base hits, little $100 shots and reach my goals nearly every day. So he took his basic plan, he took that foundation, his ability to read charts, and then he defined his entries and he started taking pictures of it over and over and over. And I can tell you guys, the one thing that holds true on Ron is that damn near every time he posts a trade in the chart in the picture in the room, it looks like this. 99 out of 100 times it looks exactly the same. It's not chasing more. It's not chasing all the trades. It's taking the absolute best trades. And in 8 seconds of Ron's life, that's $200. He's 20% on his way to his daily goal. Simplicity yields results. The process yields results. So, guys, watch the market. See what it does. Look for advantages. If you have a question, post your question. If you take a trade, post your trade. I'm going to take 5 minutes. I'm super hydrated. We made it 2 hours here, guys. I hope you're learning something. I hope it doesn't sound preachy. My only goal is for you to be successful. I've given you every tool that you need. We have put you on the world's best treadmill. The only way it's going to work is if you do the reps. I've given you the world's greatest, most expensive gold leaf hammer. But you're never going to build a house if you don't learn how to swing it. You're not expected to know how to do this in the first day. Hey, Snorri, great test. You're not expected to be great at this in the first week or even the first couple weeks. What we're doing here is we're showing you how Nexgen teaches you to read your software so that you can become a confident day trader. So I'll be back in 5 minutes. I appreciate the thank yous, but guys, you don't ever have to thank me. I love my job. I'm passionate about my job, and I'm passionate about how powerful this software is, and I like to share it with you guys. And I'm not giving it away. You guys are buying it, but you're buying it because it's the best software on the market. You're buying it because you can test it. You can test this methodology, and if you do, if you put me through the ringer, if you're like, Mark, I'm going to prove you wrong because you're a jerk face and nobody likes you, you're going to end up buying the software. So do that. Question everything, guys. I'll be back in 5 minutes and we'll get into that last hour. We'll look at all your pictures. We'll watch the live market some more and we'll look for opportunities. Back in just a minute, guys. All right, guys, I'm back. Can you hear me? Everybody's good? Got some volume, I hope. Always nervous that you can't. There we go. We're connected. All right, cool. So, guys, I'm going to scroll to the top of the classroom and I'm going to look at some of the pictures. You guys haven't been posting a lot today. Maybe there weren't a lot of entries, um, and that's okay. We're going to take a look. I'm going to start at the beginning, and here we go. Joel, you reversed your charts on me. It took me a second this morning when I saw this. But check it out. Joel's using a checklist, guys. Joel's saying these are the conditions that must be met in order for me to take a trade. His large chart has odds favorable momentum. His large chart has no termination conditions. His small chart has an area inside of favorable large triggers. Joel's telling me that he's watching 4 charts, including the 21-3s, but I'm going to ask you guys, did he need it? Did he need extra charts? Did he need more to think about, more to pull his focus away from the advantages to nail that high probability trend trade, to take a trade all the way down? And guys, this is such an important thing for new users. You can have the greatest golf clubs, right? You could have every club known to man, but you can still suck at golf if you don't know how to use it. So you focus on your swing, you focus on the process, right? The process is odds favorable momentum and no termination conditions. And when you have it, that's your trade. But here's what happens when you begin adding charts as a brand new user. Well, my 21 chart said this, but my 13-2 chart said that. But my 5-1 chart said this. And guys, the human brain will embrace whichever chart gets you in a trade because trades are exciting, even if the rules aren't met on the two that are supposed to give you the rules. So I don't care if you use more charts. That's totally up to you. But I can tell you from experience, both my own and from 3 years of training people to take trades, that the more options you give yourself, the more likely you are to break your rules. The more conditions that can be present to get into the market, the more you are going to focus on those conditions rather than a very simple plan that's been proven to win more than it loses. Allegedly. GWC, let's see what you did. Smalls are up, the large are down, but they're turning. So we don't have odds favorable momentum, right? Your large are flat, but or your synthetics are flat, but your large are up. GWC, are you in here? So a couple things on this one. Do you see the indecision on the market here? The large are down, right? You can see the flatness right here. They're not wide, they're not angled in the direction of the trend. That's a tough look. Especially, it's right there. Not odds favorable momentum. That's the odds favorable momentum. And look how that tail rockets through. Here we have flat triggers, and you can identify it here. See how it's like a deflated balloon? It's difficult to have momentum there. And it's even more difficult when you've got that divergence, when you've got that resistance. And on most charts, and you may not be running tick replay on yours because you don't want crashes, right? But when you look at the large chart, there's typically fibs from 3 time frames on the large chart, guys, and we look for our termination conditions there. You have the ones that extend all the way out, and this is that 13-2 fib GWC. That's what you were looking at. But there's also thick fibs that come from a 21-3 chart, and there's skinny fibs that don't extend all the way to the right, and these are from different time frames. But they're equally as important as you get into these trades as you look for termination conditions. So when you don't run tick data on your large chart, you still have to be aware of these areas. And what you kind of run into here is right at 81.76, you have flat triggers The smalls probably didn't quite make it through. Divergence is printing. Your triggers are flat. Um, it looks good on a small chart, right? But not so much. So if you look at my large chart, you'll see that I have 21.3 fibs right here. That's a 5.1 fib. And this one down here at 23, that's the one that's native to the chart. So let's see if we can find where your trade was. Was that this morning? It was right about there this morning. So there's that synthetic fib pulling over from the 5.1. It's not nearly as appealing with that look, is it? You're like, whoa, wait a minute. The smalls hadn't quite made it through the area, and these are flat. And that's what you get there. You get that little indecision, those bounces. If you're not going to run tick replay on your NinjaTrader 8, it's important that you take a second just to recognize where those key areas are on other charts. We're still using the 13.2 for termination conditions because sometimes on a smaller, faster chart, it may look like a termination condition, but it's really a 50-50 on the large. So I like where your head was at. I think that the addition of that fib over here might have changed your willingness to take that trade. But the real takeaway there is that those large triggers, when they're flat and deflated like that, it's you can't really have momentum. Abdul is Aziz pre-trend trade long with the support of an HVA. But you also have no trigger lines through the area, right? So GWC, here's your look. No trigger lines through the area, so we're trading into a termination condition. Rule number 2 is not met, but it's coming from support, a good bottom. Rule number 2 is not met. You do have an area, you do have triggers up, and it is supported by an HVA line. But you are giving away the advantage of a clear path. And that advantage of a clear path pushes you all the way back down. And your stop keeps you safe. And then it's interesting that you exited at the termination condition, but you also traded into the termination condition. So I'm not knocking anything, right? But I'm saying that your same reason for exiting didn't phase you on an entry. Isn't that interesting how that works? This red line with no triggers through didn't scare you to get into the trade, but it pulled you out of the trade. Yeah, so, and that's that look. That's the look on it. Initial stop keeps you safe, right? You're in at 65. You've got it way down here. And it's just indecision right now, guys. You'll see that indecision on a smaller, faster chart sometimes. And Abdul Aziz, having this market flow, this HVA line with strong triggers, it does add fuel to the trade, I think. I think it does give you another level of feeling better about the trade when maybe the conditions aren't perfect someplace else. Pre-momentum long with the support of the 13 range. So this is the S&P. Everything says down and you went up. Everything says down, momentum says down, triggers are down, trend is down, everything's down, and you decided to go up. And ultimately the market comes back down. So this is a great example of how There we go. For the hearing impaired. Fights everything. It fights trend. It fights momentum. It fights everything. And it doesn't work. And that's pretty typical, guys. All right. Ron posted one before he went to go batten down the hatches. Notice that it looks exactly like the one we talked about earlier. Everything says up, the momentum is up, the path is clear, and he takes a tiny little chunk right out of the middle. Created a plan based on his chart reading. Mike M? Yay, that's okay. Abdul Aziz, well, did you see the picture that I showed you? You fought everything on that long. You let the market flow chart convince you to take a long against trend and momentum, and it didn't work out so much. So your rules have to be met before you take that trade, right? Your rules have to be met before you do it. And then on your first picture, what I was pointing out is that your trigger lines didn't make it through the area yet. At the time of entry, your trigger lines hadn't cleared that area of resistance. But that didn't phase you on the entry, and I just found it interesting that you said you exited this trade because of the termination condition. So while it didn't bug you here at all, there it decided to be an exit, right? So it's a little inconsistency there. I like the three divergence exits. I see why you did it. Because an all chart small was above large, yeah, but they're not through the area, right? Momentum is great, Abdul Aziz. Momentum is amazing, and that's the first advantage that we look for. But what you did is you took away your clear path, right? The smalls are way below the large here, but support stops it like a brick wall. And it has the potential to do it here until those triggers get to the other side of it. It becomes an area that can create a bounce. And that's exactly what it did, is it created a big bounce. Fib and midband holds at the bottom. Right here? Sure. But that fib held there. And guys, this is one of those things. You can take any trades that you want, right? But did you go short into this fib because that fib held? Or did you get tired of waiting? And it's okay. I'm totally cool with it. And it's just the triggers aren't through. And when the triggers aren't through, do you see the down bars, the up bars? Do you see the wiggle that's created? This is why we let those triggers clear an area, because when the triggers clear an area, this wiggle starts to go away. And eventually everything turns and agrees. And see how those large triggers, those synthetics, flat as a pancake, right? And if they're flat as a pancake, yeah, okay, great, okay. Let's see who's next. All right, Mike, let's see what you got. Termination condition, triggers up. That was your target. Oh, nope, I gotta scroll back. You exited a termination condition, beautiful. Here's a termination, there's odds favorable. Smalls hadn't worked through yet, right? So again, this is one of those things where you're going to get to a point to where you make a decision based on what you're seeing. Abdul Aziz, that's exactly what you did. But because this is an educational class, I'm obligated to say, Mike, trigger lines hadn't cleared resistance yet, so therefore you are taking a calculated shot into a termination condition. Even your small chart shows it. But let's look at the advantages. Termination creates a full reversal. Full reversal gives me the best momentum that I've ever seen. And you've got a tiny little low risk shot right there from the one to the ones. It's a small pullback. So you made a calculated decision. With this many advantages and one thing against it, I'm willing to take a low-risk shot to get up to that fib with all that momentum. And that's exactly what it did. That's chart reading. And then there is a clear path and not the best triggers. You get in high, but it goes low. And Mike, remember, I think we talked about it yesterday. This is a byproduct of that loss of momentum. That's when it typically pushes a little lower. Nothing wrong with getting in high, nothing wrong with making sure that you get that trade. It just increases risk a little bit. And a lot of times when these are kind of weak and these are kind of weak, more often than not, you get that push back. But you did it beautifully. Areas to hold, stop in the right place. And what a great target. And then when the momentum is lost and you get that divergence, you say, you know what, that's cool. That's a lot of money. I feel good about it. Great trading, man. Great trading, Mike. Let's see. Jose trades. Let's see what we have going on. Termination condition. All charts agree up, but into termination condition. Trading into termination condition, thinking it will break because we're coming from a good bottom. Whew. That one didn't work out, Jose. And guys, this is why I talk about termination conditions. Jose made the choice. He knew what he was doing. But this is why I talk about it. Strong triggers, right? No divergence, window of opportunity, but that clear path isn't present. And sure enough, termination conditions for the win. And it's a termination condition on a 13-2. It's a termination condition on a 21-3. It's weak triggers, right? Didn't even confirm momentum on this chart. Jose, you took a calculated chance. You knew what you were doing. You made the choice. It just didn't work out. And that's Jose's trade. Doesn't have to be your trade, right? It's not my trade. I personally, my biggest challenge as a brand new user, my biggest challenge as a brand new user was trading in determination conditions. Abdul Aziz, momentum is up, trend is up, triggers are up, everything's up, there's odds favorable momentum, and you chose to go short and it didn't work out for you. Trend and momentum for the win, right? How often do we see that? Trend and momentum for the win. This is an opinion, and your opinion got run over. I know, I recognize this look, Abdulaziz. My opinions get run over all the time. But then you turn it around. You go, wait a minute. The trend is up. The momentum is up. The area is small. Look at that. Confirmation, confirmation. And Abdulaziz, you made a mistake and you dusted off and you full-blown rock start it a couple minutes later. Great recovery. Guys, there was a time in my life, and I love this. There was a time in my life where I raced motorcycles. I did that full leathers, drag your knee kind of stuff, and that was my hobby. That was my pastime. And I had an expert racer. There's novices and experts, and I had an expert tell me the difference between an expert and a novice, and this is so true in trading as well. The difference between someone who is seasoned and someone who's new is the recovery time from mistakes. Abdulaziz, can we agree that you made a mistake here? That's just, that's fighting a lot. And that's okay. Guys, we all make mistakes. How quick are you going to recover? Are you going to beat yourself up? Are you going to talk down to yourself? Are you going to stomp around the room and kick the dog? Or are you going to say, wait a minute, let me get my head on right. This market's going up. So Abdulaziz, I don't care about the loser. Losers happen. I want to celebrate the fact that you turned it around almost instantly, read your indicators, and took advantage of that trade. Beautiful work. Awesome trade. Solid chart reading, getting you where you want to be. I get excited about these things. I really do. All right, Rakesh. I saw it. Where'd it go? Hold on one second. Rakesh, I saw your link. There it is. All right, I got it. Same trade. And Rakesh, odds favorable momentum. You let the triggers get through and you bought the pullback. Are you in here, Rakesh? Because I'm excited about this one. Rakesh, way to take the lessons, way to incorporate them. Look at your entry with virtually no risk. Letting the triggers get through. Oh, beautiful. Beautiful trade. Guys, when you present a picture and it gives us an opportunity to grow from it, and then I see you come back and take those lessons and turn them into such an outstanding trade, I get excited. I get genuinely excited. And Rakesh, great job. Great job. Trading with all the advantages. Ooh, I got goosebumps. And then I think we saw everything still going up. You took some money and then you said, you know what? I'm going to add on at support. And then ultimately you get stopped out on that one. And one thing that I notice on here, Abdulaziz, hey Debbie, have a great one. It was a 50-50 PFI. Absolutely. But that's okay. I think one thing that you do is you run pretty big stops. Let me show you a lesson that'll help you manage these just a little bit better. So three divergences, one, two, three, in the same price range may terminate a trend, or it may create a big push, or it may make the market jump lower. These three losses of momentum in the same price range, when this one prints, that's kind of, you might take a small little hickey here and say, oh, I'm out for a couple ticks. Three divergences, I'll wait for it to all come back together. And this is in the termination conditions section. When we talk about tops and bottoms, let me give you the picture because this becomes an outstanding management tool for you guys. Three divergences in the same price range may terminate the trend. So if you're in a position and you see this happen, you see these three divergences print, it gives you an opportunity to get out for a smaller loss or a small profit or get to that point to where you can protect yourself a little bit. And Abdulaziz, that would have helped you preserve just a little extra equity here on that final trade. I agree with the trade, but the conditions changed with that third divergence. Does that make sense? Awesome. All right, let's see what we have. Some momentum, large and small through the area. So the path is clear, without a doubt, PFI. There's no such thing as some momentum. Look at where you're pointing and look at where you entered. Do you see the difference? You're pointing over here where it fits your rules. You entered on those anything can happens. Does that make sense? Yeah, but that's cool, right? You gave up the advantage of momentum, but let's look at the recipe real quick. I love to go back to advantages. You wanted to push buttons. So we gave up momentum, right? PFI, we willingly said, nope, momentum's not the best. But the path is great. And you do have a low risk area inside of favorable large triggers, a tiny little window. So what you're doing is you're going outside a high probability and you're making a decision, hey, this is a medium probability scenario. And I'm okay with that. If you take it, let me get to the other side of that. Look at that tiny little risk. Was that tiny little loser worth the opportunity to make all that money with a clear path? Only you can answer that question. I can't tell you whether it was or was not. I think your execution was beautiful on a medium probability scenario, on a scenario where you forfeit one of those entries, right? Or one of those advantages. Remember when I was telling Mike earlier, when we start losing momentum, when those smalls work inside of the triggers, a lot of times you see a lower push. That was your lower push. Weak triggers, we expect shallow pushes with momentum. Deeper pushes happen when you lose momentum, and you lost it on both. So there's your chart reading lesson from it. I think that the execution from a medium probability scenario is spot on because you took the trade, but you managed it smart. You had a small stop outside of the window of opportunity. So I really think great job. And if you're not going to do it again until you're comfortable, that's okay. But I'm telling you that you handled this one wonderfully. Nice job. Hey, we made it through all our pictures. What's happening in the market? Everything says down. The path is clear. And there's still one area inside of favorable large triggers if it's going to come through. And there's a pivot stop out, which is a termination condition. And that termination condition, Gary, great question. Let me go to the picture that I made earlier for it. We had the same conversation earlier. You may not have been in the room for it. There we go. So when I look at a line, Gary, and this is for everybody, when I look at a line, I go through, the first thing I do is I go through the process. Has it been hit? If it hasn't been hit, I consider it a target. Um, this picture shows, so if it's off in the distance, there's 8 ticks between the top of the bar and this potential termination condition. This is a target. And 8 ticks doesn't feel like enough room to make money, right? Most of us will agree. We're not going to enter a trade if it only has 8 ticks of potential. So Gary, this is where I remind you guys that we're trading the pullback, that pullback to an area inside. And this 8 ticks turns into 28 ticks potential from the perfect entry. So that's the first scenario. Are you good with that one? I'm calculating from the point of entry as long as it hasn't been hit yet. But then there's the second half of it, and this was the question that PFI was asking, and I think it's a great question. When I get to Fibonacci areas, these Fibonacci areas are a culmination of thousands of calculations, right? They are, in fact, that. They're areas. It may be a 3, 4, 5 tick range that gets consolidated down into that single line. Because your software is measuring every jump, bump, hit, up, down, swing, everything going on. Your software is measuring it, not only in the moment, but historically, and creating synthetic time frames and going forward and doing all this stuff. And these are all of those fibs before your software works its magic, before the algorithm comes into place. So when I talk about price missing a fib by a tick, right? That's that area. And maybe I'm going to make sure that my conditions are spot on, impeccable if it gets that close to an area. Does that make sense? Because fibs are in fact areas. But the things that aren't areas are these one-to-ones. These one-to-ones are a 100% exact, precise, to the tick projection. So if price doesn't reach that 100%, I feel pretty good about it. And then the other side of that is those divergence highs and lows. Those divergence highs and lows are 100%. They are cast in concrete, as exact as it can possibly be, reflections of where the momentum lost, where there was a shift in time. So these I like to see to the tick, to the tick. On fibs, I might be a little looser. I might be a little, well, that's my area, right? This is my area. Areas overrun a little bit. Areas stop short a little bit. Guys, there's one of those 50-50 trades coming from a termination. Multiple divergences should keep most of you out of that trade if you're following the simple plan. Look at that. Larger flat, smaller up. See the indecision, guys? We're coming from a termination condition, but I don't have momentum. Give me a Y if you see it. I don't have momentum in this trade. My smalls are up, my large are down. They're flat as a pancake. There's no advantage present. Look at what your smaller, faster chart looks like in moments of indecision. Look at the trigger lines. Flat, 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 flat. Flat, 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 flat. There's no advantage. So let's play the if then. If support holds, if I get odds favorable, if I get an uptrend, I'll look for opportunities long. If the downtrend wins out, if these large triggers roll and push back down, we'll look for opportunities short. But until I get either of those on this chart, neither of these charts mean anything to me because my advantages aren't present on the largest chart, on that broad stroke of a brush. The general consensus of the large crowd isn't giving me the information I need to feel like I have a chance for success. Do you see how quick that read was? Guys, this is your class. You have 30 minutes. There's 3 divergences in the same location. Let's see if it pushes higher. What do you guys want to talk about? I think you're all amazing. I think you're all doing a great job, and I think you're all in different spots. Allow yourself to be. Allow yourself to be new. Allow yourself to make mistakes. Allow yourself to not be perfect. Ron, odds favorable momentum. Clear path. Guys, he's 3 for 3 on recognition, isn't he? It pulled back a bit, but because everything is strong, you said I'm staying in it, right? And that was a 6 slot. Did you get all 6 out at 03? 12 ticks. That's $120, right? On a 6 lot, check my math, smart guys. That's a $750 trade with the advantage of momentum and a clear path. Guys, the software is the greatest software in the world. There's no doubt in my mind. John Novak tells people every day, if you find something better, give it to him. Let him know. He'll buy it. You just have to learn how to use it, right? You just have to learn how to use it. Nice job, Ron. 2 charts, advantages, payday. You just have to learn how to swing that hammer. You have to be patient. Look at that. So, Abdulaziz, here's that 3 divergence lesson, right? If you were in a short, 3 divergences says no. Does that make sense? So, Rakesh, odds favorable and no terminations, right? Rakesh, you can do whatever you want. There was your potential entry. 3rd divergence told you to manage out. There's 3 divergences. Should you have gone short? Right? There's your 3rd divergence. If you went short, you got stopped out. So Rakesh, 3 divergences, three divergences on their own are nothing. That's like saying we hit a blue line, can I go long, right? It's a termination condition. We have to wait and see how the market will react. Does that make sense? But if you start arbitrarily going long when everything says down, it's going to work out less than it does work. Like it's going to not work more than it works. The idea that you can identify trend, that you can identify momentum is great. The idea that you can understand areas that are likely to hold is outstanding, right? But it's got to be that combination. It's got to be putting those advantages together. And let's find, can we find the other side of that coin, Rakesh? Let's say I get this termination condition, right? And it's textbook. Let's go find it real quick. Or let's find three divergences. Here's three divergences at 850. What happened at 850? Ah, so at 8:50 a.m., we got three divergences in the same price range. Do you notice how it corresponds with Fibonacci support? And it corresponds with Fibonacci support with large triggers a full bar away. Ron, be safe. Are you seeing how we're putting this together, Rakesh? It starts on the large chart, right? The trend is down, the momentum is down, but we're directly into a termination. So now I have the advantage of Fibonacci saying that this is an area that may stop the market. I also have large triggers a full bar away, which lets me know that price is likely to close that gap. So Rakesh, you may be thinking to yourself, hey, this could be a potential long. This could be an opportunity for the area to hold, but everything says down. So I'm going to be patient. And you don't go long yet, and you don't go long yet. But then that third divergence prints, right? From support likely to hold. There may be a momentum style. This one didn't give you one, but there may be an opportunity after the third divergence at a termination condition on the large chart. Does that make sense? So you're still letting the large chart lead the way. You're looking for those great termination conditions. And then these three divergences become a confirmation tool that this support is in fact likely to hold. But just arbitrarily going long or short because of three divergences creates a problem. So by the time you get this third divergence, everything is still down. And by the time you get an opportunity where things start to agree, it's right into that resistance. So it's a little bit of a patience. You can use it to help confirm termination conditions, but maybe not a trade entry. Does that help a little bit? And then Jose using those purple one-to-ones. The same thing Abdul Aziz was asking about. So Abdul Aziz, steal this picture. With all that momentum, maybe that pullback becomes an entry that you're willing to risk on. Great trade, Jose, and great recognition of the three divergences and exiting the trade. Applying the lesson right in the moment. And then Gary, termination, full reversal, everything says up and you're looking for a pullback to see if you get it. Nice job, Gary. Pre-trade picture. And then cream white, termination condition gives odds favorable momentum and a clear path, and you take a chunk out of it. And this was yesterday, right? Or is this today? Today? But didn't you post a trade that looked exactly like this yesterday, cream white? The exact same look? And there is how you begin to reduce anxiety, my friend, is you start seeing these things repeat themselves. You want to do me a favor? It'll help you out too. Right click over here on this chart too and get those tags in there. Get your entries and exits on the smaller, faster chart. And Rakesh, check it out. Three divergences coming right from support, which is a termination, and it started that move up. And Cream White, I think you just found your trade because it's perfect. And the only thing, because you're 4 days in and you should know better by now, not really, that was sarcasm. With this much momentum, that fib typically gets hit. So now we just figured out how to get a little extra out of the trade, right? Because with all this momentum and a clear path, it's rare that that fib doesn't get hit. So that's the difference from 82 and change up to 85. That's an extra 150 bucks per contract. What a big difference that can make in a day. Nice job. Dude, great trading. Great read, great patience. Termination creates a full reversal, gives you odds favorable. The path is clear. Boom, boom, payday. Do that on a 10 lot. Your day is over. That's a $5,000 week. Not a possible 50-50. That's a full-blown termination condition, Gary. Right? It's a full-blown termination from a bad bottom. The only way it becomes a 50-50 is if the smalls get above. So let's call it a termination. In this picture, don't have a clear path. Yep, if it clears. So Gary, I only say that because it's an educational room. So I want to make sure that we're consistent on the language that goes through. I know that you know, but there's a lot of people that don't. So Sydney, what am I looking at? All right, so cream white, both triggers are above, right? What's the difference? Here, you had odds favorable momentum. Here, you have anything can happen. Big difference, right? Do we expect the market to keep cranking in the direction when the triggers are weak? Do we expect the market to keep cranking in the direction when there's a loss of momentum visually, right? So great job. I don't see entries there. Fantastic. The clear path is there, but if you're going to take a trade based on momentum, then there should be momentum present. And if the trigger lines are inside that weakening, you don't have the momentum. I love it. It's just chart reading, right? Gary, there it went 50-50. That's NASDAQ. And then there's that S&P. Look what those weak triggers did, Cream White. And you know they're going to do that because you understand odds favorable momentum. And then from that termination condition, we have odds favorable momentum. We have trigger lines breaking. It's just a matter of patience, isn't it? Just a matter of patience. I love it. It really can be this easy, guys. It really can be this simple. Just let it be. Smalls are through, large are not. It's not a clear path. I've already had a divergence. Some of you may be waiting for the pullback to the area of support inside of favorable large triggers. This area is not broken yet, though. The small and the large haven't cleared. Only the small have. It has the potential to break with all that momentum, but it's not perfect. It's not the best of the best. If I'm going to sacrifice a clear path, guys, I want to have strong triggers over here, right? I want a tiny window of opportunity, and I don't want to see those multiple losses of momentum. Because what am I doing? I'm hoping 8140 breaks. I'm hoping that it breaks. There's those anything can happen triggers. One divergence pulls right back to support. Two losses of momentum along with weakened triggers. Doesn't it make sense that it may push lower? The challenge, guys, is we don't know where lower is. Is lower 85? Is lower 80? is lower 74? With weak triggers and multiple divergences, here's the range of places this market may pull back to. And some of you go, but what if it goes? Well, are you willing to guess on where it's going to pull back to? Because your mid-band just got run over. All right, Cream White, I want you to start writing on charts and pointing it out. Are the smalls and the large through the area? So we're going to talk about termination conditions. But you know how to type because look, you're typing in the room beautifully and quickly. Which means that you're very capable of typing on the chart. You're choosing not to. The smalls are through, the large are not. This area is not broken yet. Give me a Y if that makes sense. Smalls are through, large are not, the area is not broken. It has the potential to break with the momentum, right? So you put clear path, but the path isn't in fact clear. Not yet. Why do I say that? I say that because I want you to know the difference, right? I want you to be able to tell the difference between a clear path and a not clear path. Because one is the advantage, and the other one means that that advantage is gone, and you're going to have to sit tight for a minute and wait and see what happens. Because both the small and the large have to get beyond the area for the area to be considered broken. So right now, 50% of your triggers are through and 50% are not. It's a good look, right? But 23 isn't broken. It has the potential, but it's not broken. And the window of opportunity on the smaller chart extends from 23 to 20. So I have 3 points of risk. Actually, more than that, probably 4.5 points of risk on an area that hasn't yet broken. Do you see how the identification helps you decide whether or not you're willing to take that trade? Conversely, everything cleared this area where you made money. So we talk about those advantages over and over. We talk about the advantage of momentum, the advantage of a clear path. And initially, I love for you guys to just piece them together and know that your absolute best case scenario comes from those three advantages working together harmoniously. Not yet. It's a fluctuation of one bar. This isn't a down bar until it hits the reversal bar marker. So now it's a down bar. And now I have a loss of momentum. It's in the window, right? There's a lot of momentum there. So it's kind of one of these things. This area is not broken. So I have to decide, do I have enough advantages in place to be willing to take the trade with the acceptable risk? Well, where am I coming from? Coming from a termination that creates a full reversal. My smalls are through, but my large are not. I have a loss of momentum. So I'm losing momentum and I don't have a clear path. Are you following me? Losing momentum and I don't have a clear path. And if you got in at the top of the window, you're already down 3 points. You sacrificed the clear path. We're sacrificing momentum. This is your last chance, right? This is the last lowest spot. And there it goes beyond. Did everybody see what just happened? That area had the potential to break. That's that 50-50. But divergence printed, taking away our advantage. Guys, this is your simple plan. This is the simple approach. This is the one that gives you the highest chance of success as a brand new user. And I use the phrase, my money is worth a perfect entry on the 5-1. No divergence. Tiny window of opportunity, right? Strong triggers, because this area may not break. So I want my entry to be perfect to get back to it. And I do that as a safeguard, and you may change your tune after a while. Gary, 50-50, divergence prints. Gary says, I'll wait for market flow confirmation. So here comes that third chart. Gary says, if I get a signal right here, if I get a yellow reversal bar, you're not going to get a market flow arrow because you don't have a white bar going into it. If he gets an antenna bar or a yellow reversal bar, Gary says he'll take that trade. So he's amended his plan to incorporate a third chart. That's not a signal. It still might go, right? Or it might not. The Gary's rules say that's not a signal, and because it's not a signal, he didn't enter the trade. Or maybe he did anyway. That's not my business, right? My job is to read your rules and see what they say. Does that help you guys a little bit to talk through the whole scenario? This is what I see. These are the advantages. This is the disadvantages. This is what the simple rules say. Do what you need to do. Do what makes you happy, right? And then you're good. And guys, we're going to do it again tomorrow. We're going to rinse and repeat. Tomorrow we're going to talk about advantages again. We're going to talk about strong triggers. We're going to talk about termination conditions. We're going to talk about advantages, right? Here's a 50-50 trade. 1, 2, 3 divergences in the same price range. Whew. Not coming from a good top or bottom. Once again, only you can decide if that's your trade. If you're not sure whether or not that should be your trade, let me give you this plan one more time. This is a great way for you to stay consistent and safe as you can be, as you learn to read the software. 3 divergences in the same price range is a termination condition. Only the small triggers through means that the area isn't broken. So if I'm coupling an area that hasn't broken with a termination condition that's visually 3 losses of momentum, even if this market goes up 100 points, I'm not willing to sacrifice that many advantages and still take a trade. Does that make sense? That's all I'm doing, is I'm using my chart reading to determine whether or not I've lost enough advantages to keep me out of the trade. So as you go into the afternoon, guys, as you go through and you watch the markets, 50-50, not a termination area, just a 50-50, Gary. Triggers have already broken through. It's a 50-50 with divergence. That's all it is. It's an area with the potential to break but hasn't broken yet. That's all it is. There's no areas over here. It's one divergence on an area with the potential to break. It's one area with the potential to break. Pretty cool, right? Eventually, it all comes together. Eventually, you guys are going to recognize these things in a matter of seconds. Eventually, it does get easy. But if you really want it to be easy, like if you really want it to be simple, if you want it to happen at a moment's notice, let me incorporate broken record mode real quick. Whoops. Post your pictures in class, track them in a spreadsheet, ask a million questions, get a million answers. Every day you will get closer. Every day clarity is going to come. Every day your reads will happen faster. And every day you're going to have a question about bending your rules. All right, so let's do it real quick. Let me sign into TechSmith Capture real fast. Whoops. Let me sign in. All right, come on, TechSmith Capture. Oh no, give me 1 second. Let me kill the one that was running. All right, there it is. All right, so, whoops. Sorry, sometimes my computer runs it in the background and it makes it hard for me to reload it. So let me make sure that I'm not running in the background real quick. And Sydney, let's do a quick little um, lesson. Oh my gosh, it's not keeping me signed in. There we go. All right, so Sydney, I know you're good at taking pictures, right? No worries. There's your picture. You're good getting to this point. Yes, everybody's comfortable doing this. Cream white, take notes. I want you guys to click on the call out button. And then I want you to left click with your mouse and drag it down to the right and then release. That creates your chat box. This is how we have conversations, just like that. Arrows, same thing. Left click, it gives you the arrow. Release, the arrow is done. Shapes, left click and drag, gives you the shapes. Call out box, left click and drag, left click and drag, left click and drag. Give me all that great information. Easy enough? Give it a try, guys. Type in post. Show me what you got. It really is that easy. On the chart, not on the chart, on the picture that you took. So if I take the picture, there's your image preview, right? This is what you're sharing in class. This is the one that you're sharing, right, Cream White? That you're hitting copy and pasting in the classroom? Yes? Cool. So before you hit copy and paste, click on the call out button up here. Click and drag, create a box, and tell me what you see. Does that make sense? So yeah, you're literally typing on the picture. Cool. And this way, man, we have the best conversations, and it keeps me from having to go back and read your comments in the chat box. Because when I'm going back and forth in pictures, this is my world. This is what I'm sorting through. So all that information on a chart, it's maybe a little selfish, but it really does. It makes my life a lot easier. Cool. Awesome. Sydney, did that help? Is that going to get some words on those pictures? And guys, it is 12:01. I'm going to go be a day trader. So I hope everybody has a wonderful afternoon. Looks like it would have hit target one if taken, but it broke your rules, Gary. Guys, this is the kind, and Gary, please take this with the intent that it's meant. Just is place of love. When you go back and have remorse about your broken rules not being taken because it ended up doing it, you're going to start breaking your rules. You're going to start breaking your rules. You're going to say to yourself, damn it, I didn't break my rules and it won. And now I'm going to break my rules and it's going to kick your ass 10 times in a row. That's Murphy working on you. So don't, either rules met or rules not met. And if you need to change your rules over time, perfect, Sydney. Nice job. Awesome. Now we're going to get to that next level together. And then, guys, that's it for me today. I hope you had a great day.